Meeting number 13 of the House of Commons Standing Committee on Finance. Pursuant to the motion adopted in committee on January 12, 2022, the committee is meeting on the inflation in the current Canadian economy. Today's meeting is taking place in a hybrid format pursuant to the House Order of November 25th, 2021. Members are attending in person in the room and remotely using the Zoom application. The proceedings will be made available via the House of Commons website. So you're aware, the webcast will always show the person speaking rather than the entirety of the committee. Today's meeting is also taking place in the webinar format. Webinars are for public committee meetings and are available only to members, their staff, and witnesses. Members enter immediately as active participants. All functionalities for active participants remain the same. Staff will be non-active participants and can therefore only view the meeting in gallery view. I'd like to take this opportunity to remind all participants to this meeting that screenshots or taking photos of your screen is not permitted. Given the ongoing pandemic situation, in light of the recommendations from health authorities, as well as the directive of the Board of Internal Economy on October 19th, 2021, to remain healthy and safe, all those attending the meeting in person are to maintain a 2-meter physical distancing, must wear a non-medical mask when circulating in the room, and it is highly recommended that the mask be worn at all times, including when seated. Must maintain proper hand hygiene by using the provided hand sanitizer at the room entrance. As a chair, I will be enforcing these measures for the duration of the meeting and thank the members in advance for their cooperation. To ensure an orderly meeting, I'd like to outline a few rules to follow. Members and witnesses may speak in the official language of their choice. Interpretation services are available for this meeting. You have the choice at the bottom of your screen, or either floor, English, or French. If interpretation is lost, please inform me immediately. I will ensure that interpretation is properly restored before resuming the proceedings. The raised hand feature at the bottom of the screen can be used at any time if you wish to speak or alert the chair. For members participating in person, proceed as you usually would when the whole committee is meeting in person in a committee room. Keep in mind the Board of Internal Economy's guidelines for mask use and health protocols. Before speaking, please wait until I recognize you by name. If you are on the video conference, please click on the microphone icon to unmute yourself. Those in the room, your microphone will be controlled as normal by the proceedings and verification officer. When speaking, please speak slowly and clearly. When you're not speaking, your mic should be on mute. This goes a long way to helping our great interpreters do their job effectively and safely. A reminder that all comments by members and witnesses should be addressed through the chair. With regard to speaking lists, the committee clerk and I will do the best we can to maintain a consolidated order of speaking for all members, whether they are participating virtually or in person. The committee agreed that during these hearings, the chair enforced the rule that the response by a witness to a question take no longer than the time taken to ask the question. That being said, I request that members and witnesses mutually treat each other with respect and decorum. If you think the witness has gone beyond the time, it is the member's prerogative to interrupt or ask the next question, and to be mindful of other members' time allocation during the meeting. I also request that members not go much over their allotted question time. Though we will not interrupt during a member's allotted time, I'd like to keep you informed that our clerk has 2 clocks to time our members and witnesses. This meeting is scheduled for a longer duration in consideration of the fact that our witnesses may not get an opportunity to leave their virtual setup. At around the halfway mark, I will be suspending the meeting for a 5-minute health break. I would now like to welcome our witnesses. From the Canada Mortgage and Housing Corporation, we have Ms. Rami Bowers, President and Chief Executive Officer. Welcome, Ms. Bowers. And we also have Mr. Bob Dugan, who's the Chief Economist at CMHC. And from the Office of the Superintendent of Financial Institutions, we have Mr. Peter Rutledge, Superintendent. So for opening remarks, we're now going to have the CMHC for
Point of order, Mr. Chair.
Point of order?
Yeah, just I'm hearing that the phone lines aren't up yet for the staff. Can we check with the clerk and see what the status of that is?
Clerk? Okay, so the clerk will be checking on the phone lines.
They're going to get back to me. Just one moment. They're working on it right now. They might need to be a suspension, but I'll let the chair know in time. It won't be more than 5 minutes interruption.
Okay, so 5 minutes till the lines are up and running. Okay, so we have the from the Office of the Superintendent of Financial Institutions, Mr. Peter Rutledge. He's the superintendent, and as I was saying, each of the CMHC or the I will use the acronym OSFI will have up to 5 minutes to make their opening remarks. We're just going to take a few minutes now. We'll suspend to see if we can get the phone lines up, and then we'll get started.
I'm not sure if they're ready to suspend right now. They're working on it, but I can let the chair know whenever the suspension is needed, and we can suspend at that time.
Oh, I misunderstood then. I thought we were suspending so that they could get the phone lines up and going.
Yes, I'm just not sure if they're ready to do so right now. They're working on the phone lines, but I don't know if they... It's up to you. We can suspend now and until we get the phone lines up, or we can start the meeting without the phone lines, and when we're ready, I can let you know, and we can suspend at that time.
Okay, let's start with the opening remarks from. We'll start with CMHC first for up to 5 minutes.
Thank you very much, Mr. Chair. I just want to check that my sound is okay and I'm coming through. Okay, that's great. I'm joining you today from Toronto on the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat people, and now home to many First Nations, Inuit, and Métis people. Je suis ravie d'être ici.
I'm pleased to be here on behalf of the Canada Mortgage and Housing Corporation. As Canada's national housing agency, we have 75 years of proven expertise across the housing system. Housing affordability is our top concern. We've mobilized all our resources to address it.
New façons.
We're doing this because the current trend of escalating house prices is worse than at any other time over the past 30 years. It hasn't slowed despite the economic uncertainty of the COVID-19 pandemic. In fact, growth in house prices has accelerated over the past 18 months.
According to our housing market assessment, the national housing market has now reached a very high degree of vulnerability. Escalating prices relative to incomes has made it more difficult to enter home ownership. And it also means that homeowners are burdened with record levels of mortgage debt. Canadians now owe 1.72 cents for every dollar of disposable income that the household has earned. This makes households more vulnerable to events that adversely affect their income. But it's very important to point out that housing unaffordability isn't just a problem for homeowners. The high cost of residential real estate is also having a ripple effect in the rental markets. And those that are most affected are vulnerable populations. Some 13% of Canadian households are in core housing need. This means that they're spending more than 30% of their income on housing or that they're living in housing that is inadequate or unsuitable. It's also very important to point out that on any given night, as many as 35,000 people across our country may be experiencing homelessness. So why is this happening and what can we do about it? Canada's housing system is complex, and there are a number of reasons for the steep continued price escalation. However, it's CMHC's position that the main problem is that supply is not keeping pace with housing demand. Canada has the fastest population growth of any G7 nation, and our housing supply has not kept pace with this growth. And the answer seems quite simple: build more housing. And that's what we're encouraging through the National Housing Strategy. But that's simply not enough. And it's not money or investments alone that will fix the problem. Other barriers that prevent housing supply from matching demand include inflexible development processes and long timelines at the local level, as well as NIMBYism in our neighborhoods. The housing crisis calls for collaboration across all orders of government, as well as the nonprofit and private sectors. Working together to unlock supply barriers is what we'll be focusing on when we're talking at an upcoming housing supply summit that CMHC is co-hosting with the Federation of Canadian Municipalities. We will also be releasing an in-depth report in June where we'll use the latest economics data to assess how much housing supply will be needed in the coming years. Thank you, Mr. Chair, for the committee's study of this very important issue. Housing unaffordability poses significant economic risks to our country, and it threatens our collective vision of Canada as an inclusive country where everyone has a chance to thrive and prosper. At this time, I'll be very happy to take any questions you may have. Thank you.
Thank you, Ms. Bowers. And now we're going to hear from Mr. Peter Rutledge from the OSFI for up to 5 minutes. Mr. Rutledge.
Good morning, Mr. Chair and committee members. Thank you for the opportunity to answer questions today. I intend to be brief as I know you have questions for me. I would also like to acknowledge that I'm speaking from traditional unceded territory of the Anishinaabe Nation. I'm grateful to have the opportunity to present in this territory. Created in 1987 in response to a period of financial system volatility, the Office of the Superintendent of Financial Institutions' purpose is to ensure that financial institutions and pension plans are regulated by an office of the Government of Canada so as to contribute to public confidence in the Canadian financial system. And for note, we call ourselves OSFI, and I'm happy to respond as such. We pursue that purpose by supervising financial institutions to ensure that their boards of directors and senior executives keep their institutions in sound financial condition and adopt smart, forward-looking policies to manage risk. We also evaluate system-wide risks that could impair the soundness of financial institutions. The risks within Canadian housing finance requires that systemic view, and I commend the committee's timely motion to study the interrelated topics of inflation and housing finance. While affordability and sustainability of housing in Canada are issues that touch all Canadians, OSFI's role centers on preserving and protecting the availability and quality of credit that sustains the housing market. A stable housing finance system with reliably available credit at prudent risk-based prices is a prerequisite for a healthy housing market in our judgment. C'est pourquoi depuis le début de la crise financière.
That's why, since the beginning of the crisis, we have focused intently on the risks in housing finance every day. In that time, OSFI and our federal regulatory partners have consistently taken regulatory actions to add more discipline and reduce unproductive exuberance in the housing finance system. Over 25 significant federal actions by my count. And we will never let down our guard. In fact, we constantly challenge ourselves to foresee housing market risks beyond the horizon and adapt early to them. That is our aim in this regard, a stable housing finance system that helps every Canadian to have a home they need at an affordable price. Our strategy is to ensure the housing finance system and the Canadian financial system have sufficient buffers to absorb the inevitable uncertainty and volatility one finds in capital asset markets such as housing. With respect to housing finance, we have multiple buffers in the housing finance system, and one will find them at the individual level, the institution level, and the systemic level. I look forward to expanding on this strategy when answering your questions. Because appropriate buffers and having appropriate buffers mitigates risk for both lenders and borrowers, our strategy makes sense in good times and bad. And our strategy adds to the uncertainty in our housing finance system and marks a sound rationale for discussing related issues here today. But we are ready and willing to take early risk-based decisions in response to that uncertainty and in our pursuit of our overarching aim. I look forward to contributing to your study and to answering the members' questions. Thank you.
Well, thank you, Mr. Rutledge and Ms. Bowers. Members, we're going to suspend at this time to get our phone lines fixed.
Mr. Chair, point of order. Who are the phone lines? Sorry, I missed that. Who are the phone lines for?
Well, we're going to get our phone lines fixed. Well, we're getting our phone lines fixed, Mr. Polyev.
For who?
Mr. Clerk, if you can work on the phone lines, thank you. We'll suspend at this time.
For who?
For who? Who are the phone lines for?
Move to questions by members from the committee. We are going to start with our first round. It's 6 minutes for each member to provide their questions to the witnesses. And we have first up from the Conservatives, Mr. Polyev for 6 minutes.
Ms. Romy, your organization, the CMHC, predicted at the beginning of COVID that house prices would drop 9 to 18%, a prediction that made sense given that incomes dropped, GDP dropped, and immigration dropped, all things that you would expect would contribute to a drop in real estate prices. And yet they increased last year by 26%, a record smashing increase. Now, you did mention supply in your opening comments, and supply is a long-term problem in Canada, but it certainly cannot explain the sudden burst in prices because, of course, we didn't lose 26% of our housing supply last year. So given that there were $200 billion more in house price purchases last year than in any year on modern record, where did all of that extra money come from?
Thank you, Mr. Chair. In terms of Mr. Polyev is absolutely correct. It is a very unusual financial crisis, the pandemic, in terms of you would expect house prices to decline during an economic decline, and it has not. Mm-hmm. And the increase is due to the very particular nature of the pandemic. You need to put into context that there has been a supply shortage, and supply in housing takes a long time to respond to demand. During the pandemic, there was very rapid change in the demand for houses by Canadians. You have probably all observed or read in the newspaper that Canadians who are, spending a lot of time at home were looking to change some of their housing choices. And we feel that this played a role in increasing demand during a period where supply was constrained. And
thank you for that. Thank you for that. Although that explanation, it would seem to make sense on the surface. You look at the data, it doesn't add up because even inner city condo prices went up. So you would expect if people were vacating small properties to go to big ones, that you would see prices go up for those bigger properties, but prices to go down for the inner city smaller properties. That didn't happen. In fact, inner city condos actually increased in prices at an unusually fast rate. But we can debate all day why prices went up. The fact is they did, and those prices were paid with real money. The amount spent on housing went from $250 billion to $450 billion. The amount of mortgages going to investors increased by 100%, according to a fall Bank of Canada report. So my question was, regardless of why prices are going up, where did the money come from?
Thank you, Mr. Chair. So in response to the question, where does the money come from? When you're buying a house, money always comes from two sources, from the banking system through loans or from personal savings. Those are the two sources. So that would be the direct answer to your question.
And because we the banking system, of course, is the major source because we saw an explosion in the volume and the size of mortgages. It could not have come from wages because, of course, wages were down. So it must have come from the banking system. Where did the banking system get an extra $200 billion that it could lend out for 5-year terms?
Thank you, Mr. Chair. In response to wage decreases, I think I'd like to highlight in the first instance the pandemic was quite exceptional in that it impacted people who are in the lower part of the income distribution more than the upper. So when at CMHC, when we're looking at our book of business, the people who are actually homeowners were actually more insulated from the impact of the crisis and others. So I think that provides some strength to the housing market.
But where did the $2 billion come from? The $200 billion of extra money come from? Where did it come from? Like, in the banking system must have got that money from somewhere. Where did that come from?
So in terms of the banking system, all our financial institutions have very sophisticated treasury operations, and they source their funds from the capital market. So in terms of mortgage funding, there are many sources of funds, but deposits is number one, but there's a number of other financial instruments that leverage the capital markets to source that funding. Would
purchases of financial assets by the central bank from those financial institutions provide more cash to them to lend out?
So in terms of, as you know, Mr. Poilievre, CMHC during the last financial crisis had some special facilities set up.
I'm talking about the Bank of Canada, not by CMHC.
So I think if with Mr. Chair, with respect, I think that question should be directed to.
Okay, here's a question for CMHC then. What is the total dollar value of all the mortgages that CMHC backs up through guarantees, insurance, securitization, or any other backing against default? The total dollar value, eliminating duplication.
So in terms of, Mr. Chair, as you're aware, CMHC plays a very important role in securing the stability of the finance market.
Yeah, just the number, please.
Program.
Just looking for the numbers, please.
It's about $400 billion.
Wait a second. Does that include everything through securitization and mortgage insurance? Everything.
If you look at our financial statements, our current guarantee balance is $400 billion, in the $400 billion range.
I didn't ask about guarantees. I asked about guarantees and insurance and any other backing that you give for mortgages. The total value of all of the liabilities backed up by CMHC.
That's the time you have, Mr. Poilievre. We're moving now to the Liberals for 6 minutes.
Point of order, Mr.
Baker.
Chair. Point of order, Mr. Chair. I have a point of order. We've already been through this with you. Normally we allow the witness a few seconds to answer a question if it's been asked just before the time ran out, and you did agree to do that for the NDP.
I did.
So
of course, I do that for everybody. But I did think
that
I had heard the witness. I thought the witness had answered the question. But go ahead, Ms. Bowers, for about 5 seconds.
Just the total dollar value, Ms. Bowers. Thank you.
So as I pointed out, the total value of our securitization, which is our total exposure, is about $400 billion.
Thank you. And now we'll move to the Liberals and Mr. Baker for 6 minutes.
Thanks very much, Chair. And I just want to say, Chair, I think you're doing a very fine job of leading our
meetings.
Point
of order, Mr. Chair. Point of order.
Point of order, Mr. Poilievre.
Yes, I did ask you at the outset, you wasted about 15 minutes trying to get phone lines reconnected. Can you just tell the committee who is on those phone lines?
Mr. Poilievre, we were suspended. Go on to, I'll take that away from your time, Mr. Baker. We did stop time. You have now 6 minutes, Mr. Baker. Thank you.
Point of order, Mr. Chair. Point of order.
Point of order, Mr. Poilievre.
I just wanted to clarify who's on the phone lines.
Well, right now you're interrupting another member, Mr.
I'm just asking you a quick
question. You can ask that at another time, but we're gonna move to Mr. Baker. That is not a point of order, Mr. Baker. You have the floor.
Thanks, Mr. Chair. I appreciate that. And now is not the time to be questioning the chair. It's the time to be questioning our witnesses. I would remind all members of that. I'd like to thank our witnesses for being here today and for meeting with us to talk about this very, very important topic. Ms. Bowers, I'd like to come back to you, if I may, and I'd really like to ask you what I heard you say in your opening testimony is that the primary cause of the increase in the price of housing is lack of supply. Did I hear that correctly?
Mr. Chair, that is correct.
Thank you. And could you once again, I want to ask you to repeat this only for the purposes of clarity. Could you articulate what are the key reasons for the increase in the price of housing right now in Canada?
So thank you, Mr. Chair. The primary reason in our assessment is a mismatch between the demand and the supply of housing, which has been developing over a number of years. And the house price escalation was made worse by this mismatch during the recent pandemic.
Thank you. Thank you very much. I appreciate that. And there's a number of measures that my understanding is that there's a number of measures that are being undertaken to boost supply by the government, by CMHC. Is that correct?
That is correct.
Could you speak to those initiatives?
So I think, first of all, I'd like to point out that when you're talking about supply, when you look at there's about 16 million housing units in Canada currently, and 95% of them is owned by the private sector. So I just wanted to give you a bit of a context of the landscape. And housing supply is something that many of the levers that affect housing supply are at the local level, at the municipal and provincial level. Having said that, there are things that can be done at the federal level to impact supply. When you look at something like the National Housing Strategy, there's a number of programs under that strategy that promote the creation of supply, especially for those who are most vulnerable in our society. So it's very important that CMHC continue to deliver on our commitments under the National Housing Supply with respect to supply-related issues. In addition to that, I believe that the CMHC and the federal government can play a very important convening role in bringing together the stakeholders that actually impact supply at the local level. So we can work better with municipalities, with provinces and territories, with private developers, as well as nonprofits to bring on supply more quickly than it is now.
Thank you very much for that. And Ms. Bowers, you spoke to, in your response to my question, you spoke about the National Housing Strategy and that there's a number of initiatives within that are meant to address the lack of supply. Are you able to speak to some of those for us?
Absolutely. So just to give you, there's quite a number of programs, so it's hard to choose which one, but perhaps I can focus on the Rental Construction Financing Initiative. And that's it's basically a loan program that is provided to multi-unit housing developers. So if you look at sort of the development of housing in Canada over the last 10 or 15 years, there has been a fairly weak response by the development sector in creating purpose-built rental. So the purpose of that program is to provide low-cost financing to those developers who are interested in developing rental versus condos, for example. So the take-up on that program has been very good, and it's just one example of the housing that's provided is close to market housing, but we feel it's very, very important to increase the rental stock in our country. Another program is called the National Housing Co-Investment Program. And again, this is a supply-based program providing low-cost financing and grants to orders of governments and nonprofits to create housing at lower price points. So we're trying to target housing supply, but at rents that are more affordable for those who are in need.
Okay, thank you very much for that. Those are two helpful examples. I mean, I also think it's important to point out that there's a whole series of initiatives that are part of the government's housing plan. And I know, Ms. Bowers, you don't have time to get into them all, and certain commitments that the government has made in terms of what we're doing in terms of the housing plan that cover a range of categories. So whether that's banning foreign money from purchasing non-recreational residential property in Canada, whether that's extending Canada's first ever national tax on non-resident, non-Canadian owners of vacant underused housing, whether that's creating a national home buyers bill of rights. We're convening federal and provincial regulators for a national action plan to increase consumer protection. The bill of rights also would ban blind bidding, establish a legal right to a home inspection, ensure transparency on the history of recent house sale prices, ensure banks and lenders offer mortgage deferrals in the event of a job loss or major life event, stop the rent evictions. We're investing $4 billion in a new housing accelerator fund. There's a rent-to-own program. I just wanted to highlight all of these initiatives because I think it's important that as we enter this discussion today, that everyone and folks at home who are watching are aware of all of that. So Ms. Bowers, thank you very much for answering our questions here today.
Thank you, and that's the time. Thank you, Mr. Baker. We are now moving to the block, and Monsieur Saint-Marie for 6 minutes.
Mr. Saint-Marie, you have 6 minutes. Thank you, Mr. Chair. Ms. Bowers, Mr. Dugan, Mr. Routledge, hello, welcome. Thank you for being here today. Thank you for your speeches and for answering our questions. Mr. Routledge, your office carries out resiliency tests on the financial system. With the current question of inflation, we can expect an increase in rates from the Bank of Canada in the coming days. In fact, even perhaps a series of increases. Have you assessed the impact of several successful interest rate increases on the financial system through with regard to the housing market and other sectors of the economy, that is? And perhaps you could tell us what other sectors are most at risk for an increase, to be impacted by this increase in rates. Thank you.
Mr. Chair, thank you for the question. The direct answer to the member's question is yes, we have been testing for that. We've done it for many years, long predates my arrival at OSFI. The formal way we incorporate that resilience into the system is through something we call the minimum qualifying rate for uninsured mortgages. Ms. Bowers at the CMHC has similar, or actually the same qualifying rate for insured borrowers. The rule is basically financial institutions we regulate are required to qualify borrowers at a qualifying rate, the higher of their contract rate plus 2 percentage points or 5.25 percentage points. So when we think about interest rate increases, bear in mind that over the last several years, banks have been qualifying their borrowers at well above prevailing contract rates. And that is a margin of safety that'll help us through that period.
Merci. Donc, selon votre analyse,
so according to your analysis, the financial system, the Canadian financial system, and the real estate market are able to deal with this upcoming rate increase. Can you confirm that for me, please?
As a financial regulator and as the head of OSFI, I should never be too confident or overly confident in financial stability. You want a regulator who is always looking over the horizon to see what the risks are coming. Having said that, the margin of safety we have with the borrowers gives me great confidence. On top of that, and I won't go into it, but can in later questions, we've put additional capital buffers, whereas if the rate rise is very rapid and households start to have problems, the system has the capital buffers to absorb it and continue to provide credit to Canadians if the future is more difficult than we anticipate.
Merci pour cette réponse.
Thank you for your response. Still with regard to inflation, are there other economic sectors that could be concerning when you think of inflation and an increase in interest rates and the financial system? Thank you.
Now, Mr. Chair, thank you for reminding me I hadn't answered that part of the question. In our world, we worry about financial services, and I don't candidly spend a lot of time on other sectors, just to be clear. Insofar as inflation might soak up the savings of Canadians who borrow to own their homes, we have the margin of safety from the minimum qualifying rate, which should help with that. In addition, savings rates of Canadians have generally risen through the crisis, and although that's not the case for all Canadians, and there is some disparity there, with folks who to own homes, we tend to have a little bit of additional absorptive cushion in higher savings rates of recent quarters.
OK. Est-ce que vous...
Does your office analyze the changes in stock prices? And is the current stock market something that could create worry with regard to the financial market stability? Can we expect that the level of risk in the stock market is currently high? Is there great uncertainty? Could we even expect that the stock market prices may correct themselves in the coming months or years? Thank you.
Mr. Chair, I used to be a stock market analyst. I'm not currently, and we at OSFI aren't stock market analysts. What we constantly ask ourselves is, if there is a market correction, do we have the buffers, the capital, the liquidity in the system to absorb that? We work hard at an institution by institution level. Sometimes they're a little irritated with the amount of safety that we oblige them to put in place. And we are confident that the financial institutions we regulate can absorb market volatility and market uncertainty. We do it at the aggregate institution level, and we also spend a lot of time at the business unit level, the capital markets business unit level, at major institutions.
Merci beaucoup.
Thank you, Monsieur Samedi. That's your time. We're moving now to the NDP and Mr. Blakey for 6 minutes.
Thank you very much to our witnesses for being here today. Mr. Rutledge, I wanted to ask, at the beginning of the pandemic, there were hundreds of billions of dollars in liquidity that were made available to the Canadian banking system, ostensibly to be able to provide mortgage relief to Canadians who had lost employment as a result of the pandemic and were going to have a hard time making their mortgage payments. As MPs, I think many of us heard anecdotally that they felt that their banking institutions weren't there for them when they were in crisis and needed relief on those mortgage payments. I'm just wondering if your organization has a way of quantifying the extent to which that extra fiscal room that was provided to banks was used for mortgage relief for Canadians who were having a hard time paying their mortgage, and to the extent that it wasn't used uniquely for that, that money in that fiscal room may have been used in order to finance real estate investment that's partly driving up or responsible for these extraordinary increases in housing prices during the pandemic.
So, Mr. Chair, there's a two-part answer. The first part, how did we measure accommodative relief provided by the banks through the COVID shock? There were approximately 750,000 mortgagors or borrowers who had mortgages who had mortgage deferrals of 6 months. And so that was a very, very high number of accommodation. I recognize it may have not got every Canadian, but did address 750,000 of them. To the question of, has there been credit provided to folks who seek to invest in housing, maybe either buy a second home or buy a home to flip? And the honest answer is yes. The banks have provided credit to those home buyers. Investors in a recent Bank of Canada study were estimated to represent about 22 or 23% of home buyers in the last year. A more historic norm would be in the mid to high teens.
Thank you. Does OSFI have a way of measuring the extent to which people who are putting up a down payment for a property beyond their primary residence are actually providing that capital themselves, or the extent to which they're leveraging equity in existing properties in order to make a down payment on a subsequent property?
Mr. Chair, the underwriting decisions and that is an underwriting decision, is a decision for the banks. But we don't, but we're not disinterested in that. We have a principles-based regulation system. We do not assign the banks rules, but we assign them principles and expectations we expect them to meet. We do that primarily through something called Guideline B20, which sets out the principles we expect the banks to adhere to when they underwrite residential mortgages. And the question you pose is the question we expect them to address underwriting each and every mortgage. And then usually annually we ask, we have a special conversation with lenders, and we ask them how they're doing on those expectations.
We've seen a number of reports over the last number of years, but even as recently as this fall by the parliamentary budget officer saying that, you know, we're at a point now in Canada where 1% of the population owns and controls 25% of the wealth that's generated in the Canadian economy. And the reason I raise that is to ask, I mean, notwithstanding liquidity provided to banks at the outset of the pandemic, what's your assessment of the amount of, you know, private capital and large savings on the part of a small, wealthy contingent that could be mobilized in order to drive a serious level of investment in the housing market, that wealth that existed prior to the pandemic? And we know that housing inflation costs has been a problem pre-pandemic. We've seen an acceleration of an already vicious trend line. But to what extent are other forms of private capital out there providing the impetus for some of these massive housing price increases we're seeing?
Mr. Chair, our responsibility as the prudential financial institution regulators is to ensure that there is capital and other margins of safety so that credit quality remains high and available to Canadians when they need it. We are not the office to do an in-depth study on sources of capital. There are other institutions within the federal safety net network that would focus on that.
Thank you. And if I have some time remaining, Mr. Chair, I'd like
50 seconds.
Okay, well then very quickly to Ms. Bowers, I just want to talk about the extent to, I wonder if you have this information with you today, and if not, maybe you could follow up with the committee. But I mean, prior to the cancellation of the National Housing Strategy in the mid-90s by the then Liberal government, CMHC was very much involved in delivering new social housing units regularly every year. That predictability of funding made it easier for nonprofits, cooperatives, and others to acquire land and to do planning so that they could develop proposals proactively rather than trying to react when land or buildings became available. I'm wondering if you could give us a sense of the number of units that CMHC helped to create at that time versus what their kind of average units per year have been over the last 25 years or so.
In a very short answer, Ms. Bowers, thanks.
So a very short answer is during that time that you referred to, about 10 to 15% of the housing starts was social housing starts funded by the federal government. And the percentage right now is much lower. So if that gives you a sense of, so 10 to 15% of say 200,000, that's 20 to 30,000 units per year.
Okay, thank you. And we're moving into our second round of questions, members. We're starting off with the Conservatives. We've got Mr. McLean up for 5 minutes.
Thank you, Mr. Chair, and welcome, Ms. Bowers, and thank you for coming here today. I have some questions today that follow on a line of questioning that I had on Monday when this meeting sat for the first time. It's regarding studies that you've been doing through your IDEA labs in your organization. I did a little homework on this. You have 47 solutions that are in process right now. $30 million you're spending on these IDEA lab solutions. But one of the ideas that came forth was from a gentleman named Paul Kershaw, Generation Squeeze out of Vancouver, recycling more or less his own thesis and putting it forward as a solution for the government of Canada to increase housing supply, even though that is the objective, the goal of these IDEA labs is to increase housing supply. Mr. Kershaw, Generation Squeeze, had no solutions that were going to increase housing supply. They were going to increase taxation of housing in Canada. Can you tell me how something that's just going to increase taxation was vetted through a program that was supposed to look at increasing supply, please?
Thank you, Mr. Chair. With respect to the Solutions Lab, you're absolutely right. The Solutions Lab is a program really to encourage stakeholders to look at innovative solutions to the housing problems that we face in Canada. I do want to reiterate that there is no requirement by the Government of Canada or CMHC to adopt any of the proposals that come out of the lab's reports. In terms of the Generation Squeeze report, one of the recommendations that they put forward was tax related, but it's my understanding that there were a number of other recommendations as well. The purpose of the Generation Squeeze report was to examine issues related to housing, wealth, and intergenerational inequality. I think there was one tax-related items, but there was a whole host of other recommendations that were considered by that.
Okay, thank you. But he does talk about this intergenerational inequality. He does make the excuse for it, even though his thesis predated the ballooning of government debt. He said ballooning government debt is the reason we have to address this because we're passing on a whole bunch of debt to a future generation. And this is one of those things. Does the CMHC recognize that by actually taxing primarily seniors when they sell their houses, that they're actually taxing one of the main saving vehicles that senior citizens in this country have in order to abet their retirement at that point in time? Is that a recognition that happens in CMHC?
Thank you, Mr. Chair. CMHC has done no work on the topic of capital gains tax and the impact of taxation on housing. So unfortunately, I'm not in a position to answer this question.
Okay.
My apologies.
Can you tell me how much Generation Squeeze was paid, not once, but potentially twice by your organization in order to advance these ideas through your organization?
So the entire Solutions Lab is a $24.5 million program over 10 years. And it's my understanding that for the Generation Squeeze, I think the amount of funding was in the range of $250,000.
One time or two times?
I'm not familiar with the two-time payment, so I'd have to look into that part of your question. My apologies for not knowing
thank
that.
you very much. If I can go further on something different here a little bit. We talk about this supply, and I've looked at all the numbers, and like Mr. Rutledge, I've done a bunch of analysis in my past career. However, I'm trying to see where the actual supply is falling short. In my city, the supply of rental housing is actually significantly rising, yet we're still subsidizing it. 10% vacancy in rental housing, and yet we're still building more. We're transitioning office buildings into rental housing, and yet the money's coming from somewhere, but are we building the wrong kind of housing? Are people actually not looking at buying these condominium type houses downtown anymore? And we should be focusing on single family homes again.
Mr. Chair, just confirm the questions for me.
No, it's for Ms. Bowers.
Thank you.
Ms. Bowers. Thank you, Mr. Chair, for that question. So CMHC, we feel that all types of housing supply is good supply. We feel that condominium buildings are great, but so are homes, detached homes for Canadians as well. We think that it's very important for CMHC as Canada's housing authority to provide the market with better information about the type of housing that Canadians need, and we need to do a better job.
I have a direct question there, though. Is the supply?
That's the time, Mr. McLean. We're already at well over 5 minutes, so we're moving to the Liberals now. You're welcome, and to Ms. Zarowitz for 5 minutes.
Thank you so much, Mr. Chair, and I want to thank both of our. Well, actually, we have 3 presenters with us today, and I just want to say thanks so much for being with us. I really appreciate you making the time and spending 3 hours with us today. My first set of questions are going to be to Ms. Bowers. Ms. Bowers, just because I think anybody who might be listening into the conversation around Generation Squeeze and the Solutions Lab, I know that as of December 31st, 2020, there were over 47 Solution Labs funded by CMHC. Can you just confirm that there were multiple sort of projects that were funded by CMHC? To find sort of affordability solutions.
Ms. Zarowitz, excuse the interruption, but your mic is not on. Your mic. Yes, if you could just fix that, please.
How would I fix it?
Clerk? unplug and plug back in, I guess.
Oh,
No, Mr. Chair, if I can help there, you go onto the mute button down at the left bottom of your corner, click on
No.
the top barrel,
how's
and
that?
then
Oh, sorry. How's that? Hello?
That's excellent. Okay, great.
Oh, thank you. I'm sorry. I'll have to restart. I'm so sorry, you guys.
Okay.
I'm sorry.
All right. Go ahead.
Sorry. Thank you. Okay. So first, thank you. And then my first questions are a set of questions are to Ms. Bowers. Ms. Bowers, I just want to confirm that there's been multiple sort of affordability solutions that have been submitted by many groups, and the Generation Squeeze is just one of many that has come into CMHC.
Yes, there 47 projects have been submitted, and you can find them on our website.
And then I just want to make sure it's crystal clear that CMHC does not offer advice on tax policy to the federal government.
That is correct.
Okay, perfect. Thank you. You had mentioned that some of the reasons why we've had some issues in terms of building more housing is just how long it's taking to get approvals at the municipal level, and also NIMBYism. My understanding is part of the reason that we set up the $4 billion Housing Accelerator Fund for the biggest cities is so that we could build an extra 100,000 sort of middle class homes by 2025. And that's in addition to the numbers we already had. But it was to go to cities that were going to help reduce those timelines, deal with some of the zoning issues. Can you confirm that that is the case for this particular program?
Thank you, Mr. Chair. I just wanted to highlight that this program is a program that has not been launched. It was part of, I believe, a party election platform, and there was an intention to focus on that as part of the mandate letter for Minister Hussain, who is the minister responsible for CMHC, and it is correct that the objective of this proposed program is to provide incentives at the local level to incent housing supply, and to really provide municipalities or provinces and territories, for that matter, with incentives to unblock some of the barriers to housing supply creation.
Well, thank you for that clarification, Ms. Bowers. I think I'm a little bit ahead of ourselves, just because I think we're all anxious to try to get some more supply into the marketplace. One of the other things that I was curious, in answer to Mr. Poilievre's question around how where's the money coming from in terms of the ability to buy these houses. And I know you had mentioned bank loans and personal savings. My understanding is that there's also, many believe that there's a huge intergenerational transfer of funds that's actually happening right now between sort of parents or grandparents and sort of, other family members to actually purchase housing. Do you also think that that is where some of the funding is actually coming to buy some of the housing right now?
Thank you, Mr. Chair, for that question. And again, my answer to this is a little bit anecdotal because CMHC doesn't have a direct view of where the funding is coming from, but there have been a number of reports issued by Canadian banks that have shown transfer of funds from parents or grandparents to first-time home buyers. And so I think there is some. We believe that some of that wealth transfer is happening.
Okay, thank you. And then I wouldn't mind getting into a few solutions. We have a number, in my riding of Davenport, we have a number of nonprofits that are land rich, but not cash rich. And they would love support in order to actually build some affordable housing on their particular land. Is there a role that CMHC currently performs in terms of supporting that particular, like helping nonprofits? And if not, is that a role that you think CMHC can actually take on?
A short answer, please.
This is a role that CMHC currently plays. When you look at the programs in the National Housing Strategy, many of them are financing programs designed specifically to help nonprofits and other affordable housing providers.
Thank you so much, Mr. Chair.
Thank you, Ms. Zarowitz. Now we're moving to the block, and Monsieur Sainte-Marie for 2.5 minutes.
Mr. Sainte-Marie, you have 2.5 minutes. Thank you, thank you, Chair. My questions are for Ms. Bowers or Mr. Dugan. With an expected increase in rates, do you expect an increase in payment defaults, mortgage payment defaults from clients that you insure? Thank you.
Thank you, Mr. Chair. Of course, we're concerned about the impact of interest rate increases on families because we understand that families are stretched and additional expenses can stretch family pocketbooks. Having said that, when we look at the mortgages that CMHC insures, which we sort of stress test on a regular basis, our observation is that mortgage defaults are caused primarily by surge in unemployment, and that's what causes mortgage defaults. Most families, we find that interest rate changes can have an impact, but it's very, very small relative to other factors. One thing that's worth pointing out is that we have a system in Canada when a first-time home buyer, for example, qualifies for a mortgage, they're actually qualified at a stressed rate. And this buffer between the actual contract rate and the stress rate provides a bit of a cushion for some of those unanticipated interest rate changes.
D'accord, merci. Donc, ça concorde avec.
Thank you very much. So that is in agreement with the answer given by Mr. Rutledge. Thank you. Do you know how much household revenue goes to housing? Do you keep track of that information at your corporation? And do you know how this has changed? And if so, please give us details.
So I thank you very much for the question, Mr. Chair. And I'd like to just give the microphone. I feel like I've noticed I've just been just talking all the time. So I'd like to sort of pass the mic to our chief economist, Bob Dugan, who will be able to provide a very comprehensive response to this question.
Sure. So thank you, Romy. Yes, Mr. Chair. So, we've seen certainly an increase in house prices during the pandemic, which has led to, an increase in the amount that people have to borrow to buy homes. This has been offset by decreasing interest rates or mortgage rates. And so what we've seen is when you look at mortgage payments as a share of income, they cycle around a little bit, but the trend has overall been sort of flat over that period. So we haven't seen a big increase in the principal and interest payments as a share of income during the pandemic. Of course, going forward, if interest rates are to start to increase, there is some risk that could start to rise slowly, bearing in mind, though, that many Canadians have fixed mortgage rate contracts, so it won't affect everyone right away when interest rates go up. So, for example, people with a 5-year mortgage rate recently negotiated that don't have to worry about that for another 5 years. People with variable rates or shorter terms, it'll affect them a little more quickly. But overall, we've seen very flat mortgage interest payments to income ratios.
Okay, thank you. And that's the time, Monsieur Samari, and we're moving to the NDP. Mr. Blakey for 2.5 minutes.
Thank you. I wanted to follow up with Ms. Bowers. Earlier, you said that, up to around 1995, CMHC participated and played an active role in producing about 20 to 30,000 units of social housing per year, and that's significantly less now. I'm wondering, what do you think it would take in order to get CMHC to the point where it was actively involved in the creation of 20 to 30,000 units of social housing annually again?
So in terms of, that's a difficult question to answer, Mr. Chair, but I think I can tell you, it's, first of all, it's when we look at our housing programs across the country, the cost to create one unit of housing varies according to location. But from our programs, it ranges from anywhere from $300,000 to $500,000 dollars per unit. So you can sort of do the math in terms of if the government were to finance that level of construction, that would be the amount of support that the government would have to be able to finance. But I'd like to note that housing is a shared responsibility. There are many orders of government involved in it, and part of the factors I like about the National Housing Strategy is that it's given CMHC an opportunity to align the work of the federal government with others to support housing development for those in need of affordable housing.
And I think it's fair to say that at the time that CMHC was producing a lot of social housing, it was doing that in collaboration with provincial governments, cooperatives, and other non-profit groups. It didn't ever really do it alone, but always had to work in partnership with others. And yet we're at a place where CMHC is involved in delivering much less social housing annually than it used to under that program from kind of the 70s until the mid 90s.
I agree with that. And I think I would also highlight that the fiscal environment is very different now from 30 years ago. There's been a dramatic change in the cost of housing and the cost of land in our city. So those are things that really affect housing costs and really make it difficult for any level of government to participate actively in this space.
Sorry, that is the time. Thank you, Mr. Blakey. We're moving now to the Conservatives, and I've got Mr. Stewart up for 5 minutes.
Thank you, Mr. Chair. So to Ms. Bowers, thanks for being here today. I was reading in some of my research. You said your team had shared a single goal that by 2030, everyone in Canada will have a home that they can afford and that meets their needs. Can you tell me the number of dwellings, or at least the rough estimate? And I don't mind if you round up, I guess. Can you give me the rough estimate on how many dwellings that would actually have to be accomplished between now and 2030?
Thank you, Mr. Chair. And the reason I can't give you a number of dwellings is because it's not just a matter of building houses. Housing is complex, and affordability can be met certainly by building houses, which is very important. But there's also a need to think about how much people are paying for their housing and their income level. So it's quite complex to land on an exact number. But just to give you a little bit of a sense of currently, according to the 2016 census, 1.7 million Canadians were in core housing need, which means that 1.7 million Canadian households were spending more than 30% of their income on house-related expenses. So the magnitude of the challenge is quite significant. CMHC used 2030 because that's aligned with the UN's SDG goals, but it's a bit of a moonshot aspiration for us. And we like to sort of have that as our moonshot because it really helps galvanize the organization to help serve Canadians better.
Okay, so you are basically saying that the goal is more aspirational than actually something that's measured and with certain targets each year? Would you say it's more of an aspirational goal?
It's an aspirational goal, Mr. Chair, but if you look in our annual reports, there's targets established according to different programs that we have that we feel are moving us towards that goal.
Have you taken into account that, Canada each year, I don't know the exact number, but I think it's at least 300,000 people migrate to Canada. It's just an estimation every year. When we get new Canadians, obviously they need a home too. Is that factored into this goal?
When you're thinking about the housing needs of Canadians, you absolutely need to take into consideration our immigration targets because, as I think we all share the belief that immigrants are good for our country and really provide support to our economic development. And as we think about the housing challenges that we face as a country, we need to think about the needs of immigrant families and the kind of housing units that we need to create to serve their needs.
Okay, appreciate that. Also, Mrs. Bowers, I've heard from countless provincial stakeholders and private developers that say that CMHC, and this is the voice of the developer, not so much from me, and it's not a direct criticism, but I need to explain to you what developers tell me so that you can answer it. That CMHC process is long and complex. It frustrates developers, and the time it takes to get projects underway is really drug out, which impacts the cost. And as we know, right now alone, we have over 85% inflation just in 6 years. Last year, home inflation hit 25%. And Bloomberg reports Canada has the second most inflated housing bubble in the world. So if private developers believe CMHC is actually jeopardizing projects, at the very least delaying them, so the developers have to start all over again, sometimes reestablishing financing again. Can you explain to me where that type of irritation is setting in for the private developers, and could you just speak to that?
Thank you very much, Mr. Chair. And I'm very sorry that you're getting this feedback from the development community. CMHC has been quite busy delivering on the National Housing Strategy. There's been a huge demand for some of our mortgage insurance products, especially from the development community. And we've been working very hard to improve our turnaround times. But, you know, we can always improve, and very happy to talk to any of the specific developers that Mr. Stewart may have been speaking to make sure that we take their feedback into account so that we can become a better organization serving Canadians.
Well, I mean, I
15 seconds.
Okay, could you just explain to me about the red tape that I'm hearing from private developers? What are you doing to alleviate the red tape?
So we've, through the last 2 or 3 years, we've gone through a number of process improvement initiatives that have actually decreased our turnaround times by over 50%. Is that still good enough? No, we need to do more. But when you're thinking about our underwriting process, we're always balancing the need to do the right risk management to protect the balance sheet of the bank of the Government of Canada with the need to get the money out the door. So there's always a balance between speed and good risk management.
Thank you. And thank you, Mr. Stewart. Now we're moving to the Liberals and Mr. McDonald for 5 minutes.
Thank you, Chair. I'm going to direct my first question, I think, to Mr. Rutledge. And Mr. Rutledge, I read your speech that you presented in Vancouver recently prior to Christmas, and there was a few things that kind of interested me, and I just wanted to just maybe extend your viewpoint on them. And one was our financial system has fared extraordinarily well through several bouts of financial volatility, including the last 18 months. I just want to know, what are the avenues to lessen that risk going forward?
Mr. Chair, you know, the strategy, the aim is what the honorable member referred to, which is stability or resilience in the face of volatility. The strategy is to build buffers in the system. Buffers could include at the borrower level, which I spoke about earlier with the minimum qualifying rate. Buffers could include system-wide capital expectations, and buffers could include individual capital and liquidity buffers for individual institutions. And it is a multifaceted array of, if you will, buffers or cushions intended to blunt the impacts of uncertainty and volatility in the market.
So are any of those buffers depicted basically to any demographic, or is it just it's a blanket type?
So the individual buffers I talked about, for example, the minimum qualifying rate would just be for home buyers. That would be the demographic. The other buffers, I should have been clear, referred to either institutions overall, so federally regulated financial institutions, banks, insurance companies, and that would be systemic and broad expectations about capital or about liquidity. And then at an individual institution level, we'll go in, and if we see risk concentrations or stuff we're concerned about, we'll add to those buffers specifically for that institution. And that way we tend to minimize the volatility that might come from a financial institution getting into trouble.
Thank you. Can you explain what you mean when you say residential mortgage credit risk has risen modestly?
Yeah. What we sort of have, when we think about residential mortgage credit risk, Mr. Chair, we think about a variety of factors. Some of them, like the fast rise in housing prices, gives us cause for concern and can foreshadow deterioration in mortgage credit risk. Other elements, for example, debt service ratios, so the percentage of debt payments mortgagors will have to pay relative to their disposable income, are getting better. To give you another number, there are 5 million mortgages outstanding according to the Canadian Bankers Association, and in that data set, only 8,720 are in arrears today. That's lower than it's ever been, at least in their data set. And so credit quality is unusually high, and that's sort of a countervailing factor. And that explains on a net basis, it's risen modestly because of the acceleration in prices, but offset by other factors that show that it's diminishing.
Thank you very much. I'll go to Mr. Duggan now. I know there's been a lot of discussion about the Bank of Canada and raising interest rates, and I just wanted to clarify. Some economists are saying that even raising interest rates may drop housing prices. The CPI measurement used by lenders will grow because the rate of interest is significantly weighted. Can you explain that, Mr. Duggan?
Sure. Thanks, Mr. Chair. So I guess you're asking about how interest rates and house prices work in the Consumer House Price Index, ownership, shelter costs. And it gives a very different answer than when you just look at current house prices, because what the CPI is trying to do is measure the impact on the average homeowner Canadian of increases in interest rates, of changing house prices, and not everyone is buying a home today at current rates. And so the mortgage debt reflects an average across Canadian homeowners, and the interest rate reflects an average across Canadian homeowners. And so current conditions don't get fully reflected in the CPI. It's sort of I think I'm answering your question, that it sort of takes into account more of an average, so it reflects the burden on an average homeowner's pocketbook of owning a home today. So it's not at the margin, but an average across all homeowners.
Okay, thank you.
Thank you. And thank you, Mr. McDonald. That's your time. We are moving to our third round of questions, members, and we have the Conservatives up, Mr. Chambers, for 5 minutes.
Thank you very much, Mr. Chair. Thank you to our witnesses for being here. This is an important study for our committee. There's been 85% inflation in the housing market since 2015. And as my colleague mentioned, Bloomberg ranks Canada as the second most inflated housing bubble in the world. It now takes up about 2/3 of a family's gross income. So my first question would be to Mr. Rutledge. Have you raised concerns or warnings to the Department of Finance, and in particular the minister, about vulnerabilities to the financial system from an overheated housing market?
Mr. Chair, my advice or consultations to the minister are and should be confidential. With respect to the risk to the housing system, housing finance system, and then the broader economy from very high house prices, we're very alert to it, and that explains our actions over the last couple years, and indeed going back beyond a decade, to add those safety buffers I talked to help absorb any volatility that might come after that run up in house prices.
Thank you. Has the minister herself asked for additional briefings or analysis on vulnerabilities, or her office or anyone in the government about vulnerabilities to the financial system from an overheated housing market?
Mr. Chair, my consultations with the minister will remain confidential, but I understand she will appear before this committee, and that might be a question to ask her.
That's interesting. So can you, if you won't discuss, what might be the analysis, has an overheated housing market been discussed at senior advisory committee meetings?
Those committee meetings are confidential and chaired by the Deputy Minister of Finance. I'm going to keep my counsel with respect to that as well, Mr.
Okay,
Chair.
well, we may look for additional information later. This committee may ask for. Mr. Rutledge, continuing with Mr. Rutledge, Mr. Chair, in an interview with BNN, when referencing speculators, you were quoted as saying, kind of, all the power to them. This is a free market. Isn't part of the problem in the housing market that we have this speculation, and the speculation actually increases risk to the overall financial system?
So, Mr. Chair, factually, I did say words to that effect, and factually, investors as a percentage of home buyers are higher than they've been traditionally. We have a free market, we have a free country, and we have a housing system where Canadians, if they choose to invest in a second or third home, can do so if their banks will underwrite. And that comment specifically related to that reality in the context of OSFI has to make sure, knowing that happens, and knowing that that activity is in greater percentage, we have to make sure our housing finance system can absorb the volatility that might follow that activity.
Thank you. In that same interview, Mr. Rutledge, you mentioned that if we don't build supply, that you would be very concerned about increases in financial system vulnerability. We just heard testimony from Ms. Bowers that we are unable to meet our supply goals over the short and the long term. Are you concerned?
Mr. Chair, at a speech in Vancouver, I did and continue to hold the view. I did state the view and continue to hold the view that a supply-demand mismatch is a prudential issue in that it'll tend to produce higher housing prices, and housing prices are already quite high relative to income. So the important thing for a superintendent to do is to acknowledge that and begin to redouble efforts to ensure whatever might come of that, the system can manage and continue to provide vital services to Canadians.
Thank you. Switching to CMHC, thank you, Ms. Bowers. You mentioned your primary concerns over supply, and that's really affecting price inflation because of this mismatch between supply and demand. We talked about a bunch of supply issues. Have you raised kind of concerns about the effectiveness or the counterproductivity of demand side proposals from the government, including, the new TIFSA account for home buyers, doubling the home buyers tax credit? These are proposals that are going to, juice up the market on the demand side. Are you concerned about these?
Short answer, please.
Thank you very much. In a supply-constrained market, you have to be very careful about measures that impact demand. So, if CMHC is asked to provide policy advice, we would take that into consideration in providing our advice.
Thank you, and thanks, Mr. Chambers. We're now moving to the Liberals, and I've got Madame Châtel up for 5 minutes.
Merci beaucoup.
Thank you very much, Chair, and thank you to you, Ms. Bowers, and to you, Mr. Rutledge, for being here, and Mr. Dugan as well. I have questions for you regarding specific cases. And I understand well, what I read confirms it, that we have a problem of supply and demand. You mentioned earlier, Ms. Bowers, the idea of having a study that would determine the ideal number of supply.
Could come with as the ideal supply in the housing market. I'm interested in that study. J'aimerais savoir exactement.
I'd like to know exactly what the stages will be and when this study will be ready, because this would be essential for determining proper policy.
Thank you very much for that question, Mr. Chair. I'd like to give my colleague Bob Dugan a chance to respond, because it's his group that's actually doing the study, and it's probably best that you talk directly to Bob. So, Bob, if I could get you to speak about the supply review that your group is working on.
Okay. Merci beaucoup.
Thank you very much. It's a study that's quite complex to carry out. We expect it to be ready in about June of this year. It's complicated because we have to determine the offer over a certain period of time. We want to go up to 2030. That would be forecasts with regard to increase in the growth in demand and supply and so on. All these issues taken together have to be examined, and then we try to forecast the number of units, housing units necessary to respond to the increase in offer between now and, or rather increase in demand between now and 2030. There are some other indications from other organizations. For example, studies have shown that Canada currently, with its housing stock per capita, is below the G7 average. And in some provinces, Ontario, Alberta, there is an even greater lack of housing units. These studies are a starting point for our work, but we'd like to go further with our efforts to better understand the change in the lack of housing units in the years to come versus the demand. and other factors as well. Thank you very much, Mr. Dugan. You've talked about G7 countries. I looked at the curve for all G7 and G20 and OECD countries. All countries have experienced a serious increase since 2014 in housing prices. What are the factors, global factors, that cause this? Is it because OECD countries have more immigration? Is it because their population is rising compared to the number of housing units that the industry can build? That's a very good question. We didn't study other countries at our corporation, so I can only respond with regard to Canada's context. Now, in Canada, there are several factors that have increased demand. Low interest rates, an increase in population, an increase in income, and these factors have increased demand for housing in Canada. At the same time, the supply has not kept up with demand. And in certain markets, Vancouver and Toronto, for example, we were able to identify a long-term trend where offer doesn't meet supply. And we've noticed also that there has been a pretty big hike in housing prices. This has been the case for several years now. In the rest of Canada, this is a more recent trend, and we've noticed with the pandemic, people have moved into more rural regions outside of the city core. That has caused a sudden increase that has caused prices to rise outside of the major cities, Toronto and Vancouver and others. The phenomena is more widespread. Thank you very much, Mr. Dugan. To wrap up my questions, yes? Oh, I've run out of time. Thank you, Ms. Chatel.
Thank you. And we are moving now to the block. And Monsieur Saint-Marie.
Mr. Saint-Marie, you have 2.5 minutes. Thank you, Mr. Fonseca. Mr. Dugan, we're eager to see this study that will be published in June of this year. I'm convinced it will interest all the members here. If I understand what you've said, you've explained that that the increase in housing prices combined with low interest rates have made it possible for monthly mortgage payments not to increase that much. If ever there were an interest rate hike and not enough supply, would this interest rate hike bring down real estate prices? How do you see this? What's your analysis? You're on mute, sir. Sorry about that. Thanks. Of course, this will depend on how much the interest rates rise. We believe that the expected rate hike will not be enough, in my opinion, to correct market prices. Of course, we have evaluated markets in Canada right now, and an increase in the rates would certainly help the demand side. You have to keep in mind, though, that we're talking about new buyers and those who are renewing their mortgages who are going to face higher interest rates, while as those with any mortgage holder with a fixed rate won't really be affected by this rate hike for some time. There would therefore be stabilization. You also need to take into account that for most homeowners who have mortgages, they've already been qualified at much higher interest rates than we currently have. So there is some wiggle room for a rate increase. You really have to look at new homeowners, how the interest rate would affect them. Thank you. I understand that my time is up. Thank you.
don't see somebody. We are moving now. Mr. Blakey for 2.5 minutes.
Thank you. To Ms. Bowers, one of the things that I've heard in talking to folks that were involved in producing social housing in what I'll call the heyday of the CMHC in that regard, prior to the mid-90s, was that the availability of regular, predictable annual funding meant that organizations could hope to, engage in a planning process, acquire land, and then work toward succeeding at one of the annual and regular offerings. But that without that, they're in a very reactive position. Their land or buildings become available. They're trying to figure out how to secure the capital to snatch up the land or the building. They're competing with investors, and it's very hard to make a plan for how to move forward on social housing, because they don't know when funding windows are going to open and close. And so there's, I think an understandable reticence to acquire land and other liabilities when they don't know when funding is going to be made available. So I guess my question there is, to what extent do you think that even with the new national housing strategy, the CMHC and its partners in the nonprofit sector are still operating in that kind of reactive way? And what do you think are some of the ways that government might be able to help them be able to engage once again in a more proactive planning process for delivering social housing?
Thank you for that question, Mr. Chair. I agree with that assessment. The nonprofit sector, who's providing housing for the most vulnerable in our society, they often don't have very robust balance sheets. So they're dependent on government, various levels of government for support. And I can imagine that it is very difficult to engage in something like as complex as housing development in the absence of that funding.
Are you aware, and do you think it would be helpful of an inventory of federal lands in areas where there's housing demand that could be put to use for those organizations who are looking to develop new social housing?
Yes, definitely. This would be helpful. I think not only federal lands, but also municipal and provincial and territorial lands. I think there are many opportunities to use either surplus land or land that is not being used to the greatest intensity in support of affordable housing. There is a program under the National Housing Strategy called the Federal Lands Initiative that makes surplus federal lands available to nonprofits.
Thank you. And that's the time. Thanks, Mr. Blakey. Moving now to the Conservatives, Mr. Polyev for 5 minutes.
What is the total dollar value of insurance in force at the CMHC? Just the number, please.
So currently, our insurance in force is, let me just get that. It's $404 billion.
And then what is the total value of guarantees under the National Housing Act, mortgage-backed securities, and Canada mortgage bonds? The total, please, the number.
The total is 460.
So if you add those two numbers up, 404 plus $460 billion, I get $864 billion. Is that the total value of the amount of money the government is on the hook for when it comes to backing up mortgages?
So thank you, Chair. And just in response to Mr. Polyev's question, the reason I hesitated when he first asked the question is
right. We don't have a lot of time.
I know those two numbers, but there's duplication because some of the mortgages are in the securitization number.
I know that, Ms. Bowers, but what I'm asking for, what is the total number? And what I did ask you for the first time is, what is the total number when you remove the duplication?
So I don't have that number on hand, but we can certainly get that.
That is very disappointing because we're talking about hundreds of billions of dollars of contingent liability.
Point of order.
Yes.
Point of order.
This way of questioning, to me, make me uncomfortable in front of our witness. I'd like Mr. Polyev to be a tiny bit more respectful towards our witness, please.
We have talked about respect and decorum, Mr. Polyev, and just crosstalk. So for the interpreter's sake, so let's try to just stop that. That'd be great. Thank you.
it makes me uncomfortable that we have hundreds of billions of dollars of unknown contingent liabilities. Ms. Romy, if people do default on their mortgages, your corporation then pays the default loss to the bank, and taxpayers could be on the hook for that money. And the fact that you don't know the total amount of guarantees that your government, that your organization is offering on behalf of taxpayers to our banks is problematic. I'll explain why. If our housing prices simply went back to the level they were at in 2020, that would be nearly a 25% reduction in house prices. And if people went defaulted on those houses, many would be underwater. So taxpayers would then have to pay for the default loss. And I would expect that the head of the corporation that is managing these liabilities and this risk for taxpayers would know the number and have them at fingertip. And I want to go to Mr. Rutledge now to further talk about the risk. What percentage of new mortgages in last year were variable rate?
Roughly 51 or 52%.
That's an unusually high share, isn't it?
It is unusually high, and
so when rates rise, those people are immediately going to have higher payments, aren't they?
Mr. Chair, you're right. That is a correct statement.
And what percentage of households who've got mortgages in the last year have 5% down?
What percent of mortgages, Mr. Chair, have 5% down?
Yeah, a down payment of 5%.
I would have to look into that and come back to the committee, and I will do so.
And when you do make a 5% down payment, you have to pay mortgage insurance to CMHC or the other providers, and that is tacked onto the value of the mortgage, isn't it?
Typically, yes.
Yes. So that 5%, for a 5% down, you have to pay 4% in mortgage insurance fees, which means that you only, once you subtract the mortgage insurance from your down payment, you actually only have 1% net equity in your house then, don't you?
All else equal, everyone's different, and I wouldn't make a broad
So if someone's got
point of order, Mr. Chair. Point of order, Mr. Chair.
Point of order.
Understand why the Liberals don't want these questions asked.
Point of order.
Not at all. Not at all.
Point of order, Ms. Zarowicz.
I can understand why these Liberals don't want these questions asked.
There's a point of order, Ms. Polyev. Yeah, Ms. Zarowicz.
I actually think these questions are very important, but I also think the answers are very important. And I feel like Mr. Rutledge isn't allowed to actually fully answer the question. So I would ask that he be allowed to do so.
Oh, I
have been taking timings here, and Mr. Polyev had 14 seconds, and the last one 7 seconds, and he cut into Mr. Rutledge, who had 1 second and 0.41 to answer. So, Mr. Polyev, equal time, please, for the witnesses to answer those questions.
Fair point. I do want to thank Mr. Rutledge because he has actually been offering direct answers to the questions. And so if you've ultimately got 1% net equity in your house, and house prices go back just to 2020 levels, so we're just talking going back to where they were a couple of years ago, and they've dropped by 25% then, you're 24 percentage points underwater in your mortgage. Now, if you can't make your mortgage payments because you're on a variable rate, you've just acknowledged that half of new mortgages are variable, and you default, then you hand your house over to the bank in a 24% loss position, and the bank hands the bill over to Ms. Bowers over at CMHC, who then passes it on to taxpayers in the form of mortgage insurance payment. That is the risk that we're facing now. I want to know what immediate action, Mr. Rutledge, you're taking
Mr. Polyev,
to address the high level of variable rate mortgages.
We have gone well over your time, Mr. Polyev. Thank you. We're now moving to the Liberals and Mr. Baker for 5 minutes.
Thanks, Chair. So I'd like to take this opportunity just to thank our witnesses again, Ms. Bowers, Mr. Rutledge, Mr. Duggan for being here today, and I apologize on behalf of my colleagues for
point of order, Mr. Chair,
that you've experienced
point
here
of order,
today.
Mr.
Point of order
from some of the members.
Point of order, Mr. Polyev.
We had agreed that witnesses should have a chance to answer if a question was asked before the clock ran out.
The clock had long run out, Mr. Polyev. That is debate. And let's, Mr. Baker, you have the floor.
Yeah, And this is the second time, Chair. I think it's important to note that in the first 5 seconds of my period of questioning, Mr. Polyev has deliberately intervened on a point of order that wasn't a point of order. And I think he is disrupting the productive work of this committee on this important topic. So I would ask you, Chair, to do what you can in that regard. And I know it's not easy. So I'd like to apologize on behalf of the members of the committee to our witnesses for the treatment you've received from Mr. Polyev. I think that's completely unfair. And I think it's really important that we hear the answers to your questions because these answers are helping to inform us, inform our report, and the advice we give to government on how we should proceed to address the challenges that Canadians are facing in terms of increasing prices of housing and inflation and everything else that's under the scope of this study. I also think it's interesting that Mr. Polyev was speaking about how there are, he was talking about the concern he has about the risk of housing prices coming down and people not being able to afford to pay their mortgages. The reason I find that interesting is because for those folks who've been watching this committee and the previous day of hearings and testimony, Mr. Polyev has, and not just the previous day, but many days where this committee has met, he has argued vociferously against the programs like the CERB, like the wage subsidy and other programs that have allowed Canadians to put bread on the table and probably in many cases, I suspect, allowed them to continue to make payments, whether that's rental payments or mortgage payments. And so on the one hand, he's expressing concern about what would happen if people weren't going to be able to make those mortgage payments. And on the other hand, he's been arguing against the government supports that in a global pandemic and in a crisis have allowed people to make those payments. I just want to point out that contradiction. I'd like to come back, Ms. Bowers, to you, if I may. In my last opportunity to ask you questions, we were talking about supply, and you had spoken about how lack of supply is the primary reason for the increase of housing prices. Could you talk about whether what steps are being taken, if any, by other levels of government to help deal with supply issues? As you pointed out, this is a multi-jurisdictional challenge. You talked about provincial and municipal governments. So what steps are other levels of government taking to boost supply?
Thank you for that question, Mr. Chair. And again, quite a complex one to answer because there's so many actions being taken across various levels of government. I think just this week, there was actually a housing summit in Ontario, bringing together many municipal leaders to address housing challenges. So there's many programs available at the municipal and provincial level across the country to address this issue. And I think it's really, I did highlight in my remarks that problems were at the local level, but I wanted to highlight that there are many great local leaders who are trying to address these supply challenges, and I really would like to commend them for that. I think where there is an opportunity is for everyone to be around the same table, the federal government's programs to be aligned with some of the provincial and municipal government programs, and working with the private development community as well as nonprofits to accelerate housing development. And CMHC is very happy to play a convening role in this space.
Okay, I appreciate that. And look, a lot of the challenges around building more homes, I believe, revolve around municipal zoning bylaws and regulations, et cetera. And so what steps is CMHC taking, is the government taking to work with municipalities in this regard?
Again, these are, thank you very much for that question. Again, these are municipal zoning requirements are not within federal jurisdiction. So I think what CMHC can do and the federal government can do is to provide information and insights about how some of these zoning rules impair the fast supply response that we need in response to demand. Perhaps one statistic that I like to always provide to people is that compared to other international cities, Canadian cities are not very dense. So I live in Toronto, for example. There's about 480 people per square kilometer in Toronto. That's the density of our city. And if you compare that to New York, that density figure is 1,700. In London, it's 1,800. In Tokyo, it's 4,200. So that gives you a sense of zoning decisions around density can impact the number of homes that we happen in our city. So I find that creating that kind of discussion is really important.
Thank you, Ms. Bowers, and thank you, Mr. Baker. That does conclude our third round, members. We are now going to suspend to take a health break for 5 minutes and allow the witnesses to stretch or have a bio break or what they like for 5 minutes. Thank you. Now moving into our fourth round of questions, and we're starting off with the Conservatives and Mr. McLean for 5 minutes.
Thank you, Mr. Chair. I'm going to go back to Ms. Bowers here. Ms. Bowers, some questions came up on the answers you gave me in the last round there about how Generation Squeeze actually got a contract with CMHC through their Ideas Lab. You said it wasn't to do with their study on the shifting of generational taxes between house owners to new homeowners, a problem that came up during the pandemic and with this government's mismanagement of the housing market. Can you tell us how they were qualified to give other advice when this is the only thing they're really known to have any expertise in?
Thank you very much for that question, Mr. Chair. Just to repeat just my previous answer, Generation Squeeze, their proposal was to study generational wealth inequality. It was not to study the capital gains tax issue specifically. And if perhaps I was not clear on that, but I just like to state that that's their study was quite broad, and they chose as part of the solution to focus on tax for an aspect of their response.
Okay, thank you very much. But they have no expertise in anything outside of generational tax. So can you tell me the process, how they were vetted to get this contract? Because it really, if I can talk to some professors at University of Calgary or Mount Royal University and say, there's $250,000 sitting here for you to recycle one of your theses through Canada Mortgage and Housing Corporation. Is that really the process?
So with respect to our solutions lab, there is a competitive process. We provide a lot of transparency about the application process and the ways that proponents can submit their ideas. We have an internal committee that reviews all the applications and ranks them and grants the monies to the successful applicants.
Okay, thank you. I'm going to turn to Mr. Rutledge. Mr. Rutledge, over the last couple of years since this government was elected, the price of housing has gone up from $434,000 to about $811,000 for the average house, for a typical Canadian house. And that's approximately 85% inflation over 6 years that this government has been in power. And last year, home inflation hit 25%. Canadian Real Estate Association says it's the biggest gain of all time. Can we talk about that? Because as you know from financial markets, what goes up must come down. Can you tell us what you think has caused this rapid increase in housing prices? And if it has anything to do with the gross amounts of federal money that was pumped into the financial system, please.
Mr. Chair, the first thing, just for a financial stability perspective on the question, we have seen ups and downs in local housing markets, and we have not seen the disruptive situations that we saw in other countries. So the buffers that we put in place worked then, and they're stronger now. With respect to the drive up in prices, there's a multivariate explanation. Certainly one of the explanations is lower interest rates. If you lower the price of something, in this case, residential mortgage credit, demand tends to go up. Other factors are this persistent supply-demand mismatch, which does put a bit of a underlying floor and gives investors or quote-unquote speculators some confidence to come in, and that is perhaps why we're seeing more speculators come in. So there's a multivariate explanation to your very fair question.
Well, thank you, Mr. Rutledge. But I take a look at a whole bunch more money in the system, and yet a significantly greater portion of it is landing in residential real estate. Typically, it's between 5% and 8% of the market Canadian GDP. Now it's over 10% of Canadian GDP that's being invested in Canadian real estate. Whereas you take a look, contrarily, Canadian business investment is at an all-time low. So we're really pushing money into the housing sector through this government's activities. Can you please comment on that?
Mr. Chair, Canada has been shifting more of its economy towards housing for a great many years. It harkens back really to really even beyond the start of this century.
Well, let me, I mean, I have the data right in front of me here, Mr. Rutledge, and you can kind of see before the pandemic, you're right, it was already at a high of around 7% of our economy. Now it's over 10% of our economy being put into residential real estate. That's a drastic increase over the span of the last 2 years. The other part of that, of course, is that the rest of the economy is not receiving investment. Matter of fact, we're net negative if you subtract the depreciation of the capital stock in the country. Why is this choice being made by Canadians?
We're well past time, so short answer, 10 seconds, please.
Mr. Chair, the banks have chosen to allocate their capital towards residential mortgage credit because the demand is there and it remains a very profitable, well-capitalized business.
Thank you. Thank you, Mr. McLean. We're moving now to the Liberals and Ms. Zarowitz for 5 minutes.
Thank you so much, Mr. Chair. Mr. Rutledge, I'm going to start with you. I know that Mr. Poilievre gave you a number of rapid fire questions. I wonder if there's anything you might want to add or maybe elaborate on in terms of the series of questions that he had provided.
Mr. Chair, in my earlier response, I perhaps like to harken back to the question to Honourable Member Mr. McLean. In 2015, we had a fairly sizable correction in Vancouver housing, a double digit. In 2017, following the 2016 boom, we had similar in Toronto. And certainly predating those, there were plenty of mortgages underwritten, and some of them were underwritten with low down payments. Through those events, mortgage insurers did not suffer disproportionate losses, banks did not suffer disproportionate losses, and credit delinquencies remained remarkably low. The buffers that we have put in place, whether it's by the Office of the Superintendent of Financial Institutions or other departments of the federal government, including the CMHC, absorb the volatility in those cities, and I believe will absorb and are adequate to absorbing volatility that may come. I'm not complacent, and I'm always asking, where can we add more safety? But I am very confident that we have very strong buffers in place.
Thank you so much, Mr. Rutledge. And then my next question is to Ms. Bowers. Ms. Bowers, during the pandemic, it's now been we're going on to the second year. What has been the rate of mortgage defaults during this period? Do you have a sense about that for us?
So thank you, Mr. Chair, for that question. In terms of, I can talk to you about CMHC's delinquencies. Our delinquencies have been below 0.3%, so very, very low. And despite the fact that it has been an economic recession, we feel that in terms of delinquencies, the mortgage market has been very robust. Having said that, CMHC, we take risk management very seriously, and we do invest in significant stress testing capabilities to make sure that we have sufficient capital in place for any losses that we would incur.
So, and just to follow up on that, Ms. Bowers, in February of 2020, so just before our pandemic started, about a month before, our federal Minister of Finance at the time did change the minimum qualifying rate for insured mortgages. To what extent did that change actually impact the low level of mortgage default?
So that change was a change in what's called the stress test. So it provides a little bit of an extra buffer for first-time home buyers qualifying for mortgages. Mm-hmm. So it provides a little bit of cushion in the system if there's any sudden changes in interest rates. So from a prudential perspective, we feel that that kind of change is good for the system.
Well, sorry. My question was, did it have an impact on the low sort of mortgage rate?
And just sorry, my apologies. I was just coming to that question. In terms of losses, it's based on our stress testing and our experience. We find that losses in our mortgage book is caused by unemployment, not changes in interest rate. So I think the stress test may have indirectly contributed to the robustness of our mortgage book by having more stringent criteria, but I don't think there's a direct relationship between those two changes.
Okay, well, thank you. And it's an interesting point in terms of employment being more of a direct factor in terms of the mortgage default. So thank you for that. My last question is to Mr. Rutledge. Mr. Rutledge, I believe that you've made some comments in your Vancouver speech around looking at the minimum qualifying rate for uninsured mortgages. Mm-hmm. Can you maybe comment on that? it must be very difficult at a time of instability. And how are you looking at it from the perspective of making sure that we're keeping in mind that we want first-time buyers to actually continue to buy houses?
Mr. Chair, the honorable member very, very aptly describes the trade-off we face. Over the last 4 years, we put in place a stress test and increased it. So the test borrowers face is higher than it was a few years ago. And the implication is it's harder for Canadians, or Canadians need higher income levels to meet the stress. We do that for a good reason. We do that so if we have volatility and uncertainty in the housing market, that there are those buffers at the individual level that come into effect and that enable the Canadians who may be facing a bit of hardship to stay in their homes. The price we pay is that as you rise the stress test, affordability, or not so much affordability, but access to credit requires higher levels of income. And we think about that a lot. We thought about that in December when we reconfirmed our stress test, which is the greater of 5.25% or the contract rate plus 2%. And access to credit is it's not the only consideration, but it's an important consideration.
Thank you. Thank you. And thank you, Ms. Derwitz. We're moving to the block, and Monsieur Sainte-Marie for 2.5 minutes.
Mr. Sainte-Marie, you have 2.5 minutes. Thank you, Chair. Mr. Dugan, we're currently seeing an increase in rents. People who rent their housing are seeing rent hikes take place. Of course, this has nothing to do with the increase in the rate of sales of buildings, but do you see a link between the increase in rents and the increase in interest rates or the market? Or is this does this simply have to do with supply and demand?
Merci pour la question.
Answer. Thank you for the question. Obviously, supply and demand are responsible for a lot. Once the housing prices go up, if the decision to purchase means that some people can't buy. If some people aren't able to buy, they will continue to rent. That affects rent prices rather. So everything is linked together. So housing prices do have an impact. Another question for Ms. Bowers on another subject. The government announced a interest-free loans program to be managed by the CMHR for energy-efficient retrofits. Can you tell us anything about this program? When will it be rolled out and accessible? Thank you.
Thank you very much for that question. Unfortunately, I can't comment on the exact day of the rollout, but I can provide a little bit of explanation as to the nature of the program. I think the question is in reference to the Canada Green Homes Program. It's comprised of 3 parts. One is delivered through, the first part is delivered through NRCan, and it consists of a $5,000 grant, as well as costs, costs for the energy inspection required to do, changes and renovations to a home. And CMHC is not involved in that. What we are involved is, in addition to that $5,000 grant, eligible homeowners can apply to up to a $40,000 loan through CMHC. So we are in the process of preparing the launch of the program, and we'll be very happy to serve Canadians when we get the green light.
We're waiting impatiently for it. Point of order. I will be giving Ms. May my turn during the next round. Thank you.
Okay, thank you for that. Thank you for letting me know. And we'll have Ms. May up when your turn is up. So now I've got, of course, the NDP and Mr. Blakey for 2.5 minutes.
Thank you very much. Earlier, Mr. Rutledge, you had said that about 25% the market is investors at the moment. And you've also said that about 50% of the mortgages in the last year were variable rate interest mortgages. I'm just wondering if you have a sense of how much of those variable interest rate mortgages are in the investor class versus Canadians that are buying homes to live in.
Mr. Chair, that is a great question. I don't have that information at my fingertips. I'll look into it. It'll be hard to find. I'm not. I know that at the institution level is fairly. It's confidential, strategic. I just simply don't have the answer at my fingertips. I will look into it.
Okay. Does that also mean that we wouldn't know the extent to which investors versus homeowners are exposed to the threat of default in the case of an interest rate hike?
Whether, Mr. Chair, whether an investor chooses a variable rate mortgage or a homeowner with one home chooses a variable rate mortgage, they're all subject to the same minimum qualifying stress test, which is the higher of 5.25 for the contract rate plus 200. So the interest rate buffer, if you will, applies to everyone.
The government in New Zealand has taken some action to say that to the extent that somebody already owns a property, for each subsequent property that they buy, there's an increasing amount of down payment that they have to provide. They've done that as a way to try and cool off a really hot housing market there. So I guess there's two sides to that. One, obviously, is that reduces risk in terms of the possibility of default if the investor has more equity in the property that they're purchasing, but it may also have a salutary effect on housing prices. I'm just wondering if either you, Mr. Rutledge, or you, Ms. Bowers, have some comment on that as an approach, both to reduce risk and especially to try and cool off housing prices. Maybe start with you, Mr. Rutledge.
Yeah, Mr. Chair, that's a rule specifically. At OSFI, we're principles based, and we would ensure that's an underwriting practice, and we would encourage the institutions we supervise to think about that. Whether we currently now don't have that specific and discrete rule, although we do have disciplines that say if you're taking more risk as a bank, you should have more capital allocated against the loan. I would be, in answer to your question, hesitant to tie capital regulations to housing market price outcomes. Our job is to keep the system safe.
Thank you. And thank you, Ms. Blakey. We're moving to the Conservatives. Mr. Stewart for 5 minutes.
Thank you. Thank you, Mr. Chair. My first question this time is with Ms. Bowers. Last time I was talking about some of the developers, some of the New Brunswick developers, and maybe the Odd Atlantic developer that I've spoken to. And you'd mentioned that you had decreased red tape by, I think you said 50%. Could you explain a little bit about how you decrease that and what it's actually doing?
Fair enough. So maybe I'll use one example. So when we first we're tasked with the responsibility of rolling out the national housing strategy. We had a number of loan programs, and as we were setting up our processes, I think the actual processing time was I think took almost 9 months to go from the actual receipt of the application to release of funds. And during the last couple of years, we've been able to shrink that by about half that length. So that's one example.
Okay, are there any other examples that come to mind?
So with respect to our mortgage insurance business, which also can be applied to developers, we have done a better job of triaging applications by risk. So we have different processes for underwriting smaller credits versus larger. So we've tried to create some sort of triaging in our underwriting processes to make the process go faster.
Does that, reading into this triaging aspect, maybe this is a generalization, but I'm just curious, would you say that the program is geared toward the wealthiest people being successful? or at least assisting the wealthiest people to be successful? The wealthiest developers.
In response to that question, we have quite a diverse client list of developers. So we serve developers across the spectrum, be they large developers or small developers. We have very good clients and who do a lot of business with in the Atlantic region, but we also have developers in Toronto as well. So we have a fairly diverse book in terms of the developers that we serve.
One of the complaints I've heard from developers is the idea of the need rather for the quantity surveyor. Under CMHC programs, it's difficult for Atlantic developers because there is only one such outfit in Halifax, and I've heard some complaints about this quantity surveyor. And can you explain how the quantity surveyor is benefiting this process?
So with respect to that question, if I would like to take that back. I'm not aware of the specific issue with respect to quantity surveyors. So I will check with my team out in the Atlantic provinces and provide a response to Mr. Stewart.
So what I've been told about the quantity surveyor is that some of the developments in Atlantic Canada outside HRM would be large enough in scope to warrant a quantity surveyor. What's your department doing to resolve this issue, and when is it completed? From what I understand, this need to have a quantity surveyor is actually putting projects at risk, and it's dragging out the process substantially. Are you saying you don't have any insight into how this is taking place?
I'm not aware of this specific issue, but I will consult with my operations team and get back to Mr. Stewart.
Okay. How much time do I have, Mr. Chair?
Got about 45 seconds, Mr. Stewart.
45 seconds. Okay. I guess my last question, just a sec, is for Mr. Rutledge. I'm just curious with, in terms of variable mortgages, what type of oversight does your entity involve with the banks in terms of prospective buyers? And I guess hypothetically, if the banks were more inclined to prefer variable mortgages, what type of oversight would you provide in that situation? Because with variable mortgages, with the climate we have now, people are going to be paying through the roof. They already are. So what type of oversight would you provide for that part?
Short answer, please.
Mr. Chair, we have rather rigorous oversight for all mortgages, including variable mortgages, through our residential mortgage underwriting guideline, which would include measures in place to guard against the very scenario the honorable member outlines, rising variable rates, and we want to ensure borrowers can service their mortgage in that environment.
Thank you, Mr. Stewart. Also, and we're moving to the Liberals and Mr. McDonald for 5 minutes. You're on mute, Mr. McDonald.
Is that better?
That's great.
Mr. Chair, if you don't mind stopping me around 2.5 minutes, I'm going to cede some of my time to Ms. May.
Will do.
I just want to go back to CMHC and with regards to the proposed Housing Accelerator Fund, can you advise what that will look like and how stakeholders can weigh in on this process going forward?
Thank you, Mr. Chair. I can't comment on what the program is going to look like because it's under development, but I would like to highlight that we are conducting a public consultation on possible design choices that we could make, and we've sort of launched it through our social media. So we're asking Canadians and other stakeholders to provide feedback on decisions that we could make in terms of design. In addition to that, we are conducting a housing supply summit, and we're consulting very broadly with the housing community to design a program that we think would result in the best outcomes for Canadians.
Thank you. And just the housing supply challenge, obviously supply is outweighing demand. But I'm wondering about what can we do as members to help in the areas of housing to expedite cooperation and collaboration with provincial governments in our districts and municipalities? Like, is there an outline? Is there a vision for CMHC to provide more direction and more decisiveness and to expedite some of these programs and processes?
So at the federal government level, we have an FPT housing forum that is a very good opportunity for CMHC and the federal government to connect with housing authorities at the provincial and territorial level. We also work very closely with the Federation of Canadian Municipalities to have roundtables on the issue of housing supply. From the perspective of the members of parliament, you understand your communities best, and we have regional staff in all areas of Canada. So we appreciate your feedback and any insights about the very specific housing supply challenges that your constituents face across the country. Housing is one of those things where there's no solution because housing is very local, and we like to make sure that we connect with the local communities to understand the issues in the particular regions.
Thank you. And thank you, Mr. McDonald. Now we'll pass it over to Ms. May, and Ms. May, you've got about 2.5 minutes.
And I particularly start by thanking Heath McDonald for generosity on time, and Mr. Saint-Marie has also offered me some time. So I'll try to be very succinct, and I thank my colleagues for generosity. Ms. Bowers, I'm going to ask you a question, but I have a brief preamble, and I hope it will reassure my friend, Mr. McLean. I looked up the CMHC Climate Labs program with Generation Squeeze because over time I've found Professor Kershaw and his research group extremely useful and rigorous, and I know it was unintentional, any sort of slight towards Professor Kershaw, but I find that the project with Climate Labs with CMHC involved over 60 experts from community, industry, and academic backgrounds, including several from University of Calgary. So I was pleased to see that, and I'm sure it was a well-used grant from CMHC. My question to you, Ms. Bowers, and it was prompted by, and of course the context around this whole discussion with Finance Committee, is the problem with extremely unacceptable levels of barriers to people owning their own home or even finding a place to rent. It's a real crisis across Canada, but that it's all about supply. And I just wanted to ask you a bit more about that because certainly as a British Columbian, we're well aware that our housing prices began to take off in ways that were insane with money laundering and criminal activity and offshore investors. And we still have the problem of people buying homes to put them into Airbnbs and not as a home, but as an investment. How many of those factors are now still active in creating this disconnect between supply and demand?
In response to that question, at CMHC, we like to focus on supply, but we understand that there are demand factors that create house price escalation in the short term. And we are concerned about things like money laundering. One of the concerns is that we don't have a lot of good data that really helps us assess the extent of money laundering in Canada. I know there was a recent commission in BC to study this problem in more detail. And according to that study, I believe that it was estimated that perhaps about 5% of the price increases could be attributed to money laundering. But again, it was based on very imperfect data. I think what's really important on the topic of money laundering is that many jurisdictions are putting into place, better way of keeping track of who actually owns the homes, sort of beneficial ownership registers. And I think that's something that can go a long way of really understanding who is buying the properties. And CMH should be very supportive of expansion of those kind of efforts.
Thank you. Thank you. And thank you, Ms. May. We are moving into our fifth round, and we've got the Conservatives up for 5 minutes, and I have Mr. Chambers.
Thank you, Mr. Chair. First question, Ms. Bowers, if you look at market share, CMHC market share data seem to have been declining for a number of years. And then recently, it looks like CMHC has regained some market share. Is this a strategic and deliberate shift on behalf of CMHC to grow its market share?
So mortgage insurance, the mortgage insurance business is a very important part of our business. During the last financial crisis, CMHC's market share grew very substantially. At one point, because there was sort of the withdrawal of private insurers, CMHC was underwriting about 90% of, we had about 90% market share of the insured space. Since the last financial crisis, we've been deliberately decreasing our market share because we feel that it's good to have competition from our private sector competitors in the mortgage insurance space. Having said that, we're very aware of the importance that mortgage insurance plays in financial stability. So we have a target that's approved by our board to strive for about 40 to 50% of the market. We're a little bit below that right now, and we're working hard to achieve more market share. But again, we have to compete with the private sector players, and we have to up our game in terms of providing better service to our clients. However, even though we have a lower market share than we like, I'm not concerned about that because we have the expertise and capabilities in-house to scale up our business if needed. So from the perspective of providing our acting on our financial stability mandate, we feel that CMHC has the capabilities to support government and the needs of the day.
Thank you, Ms. Bowers. So, increasing market share will inevitably increase our, risk to taxpayers if we crowd out the private sector. But just switching gears here, in 2017-18, there were some new proposals by Natural Resources Canada to look at improvements, what they called improvements to the building code. Many industry players, voiced some concerns about building code changes that would actually increase the cost to build new homes and construction. Of course, we're talking about inflation to housing, and the cost to build a home is important. Was CMHC consulted, or have you done any work with Natural Resources on those proposals?
So I am not familiar with those specific proposals. It sort of predates my role as CEO. I can certainly get back to you and to determine CMHC's involvement, but generally building codes is not within our area of responsibility, but we may have been consulted, but I have to check.
Thank you very much. Mr. Rutledge, do you have any data that you could share about how the stress test is applied regionally? StatsCan typically only reports national debt service ratios and not by region. So I'm wondering if that's something that OSFI looks at, and could you provide that to the committee?
Mr. Chair, the stress test, we apply the stress test uniformly across institutions, and that would lead to a uniform application across Canadian regions. With respect to debt service ratios by region or province, and I'm making an assumption that's what they ask for, I will look into that. I don't have that off the top of my head. But you may assume that in high-priced cities, debt service ratios tend to be higher than low-priced cities.
Thank you very much, Mr. Rutledge. In 2015-16, OSFI had as a strategic imperative for the organization to get a handle or to learn more about the shadow banking sector. The CD Howe Institute has recently indicated that that sector is now about $1.5 trillion annually. That's about doubling since 2005, I believe. Do you feel like you have, in the last 5 years, have we made good progress on understanding that sector, or do you think that there's still some vulnerabilities there we need to just uncover?
Mr. Chair, by shadow banking sector, might the honourable member clarify what he means?
Non-bank, traditional non-bank lenders.
Thank you. Mr. Chair, the size of residential mortgage credit outstanding is 1.9 trillion currently. About 1.5 is provided by OSFI supervised institutions. The remaining 400 billion comes from non-banks or credit unions. By shadow bank, if the definition is what the Bank of Canada classifies as shadow bank, most of that are mortgages originated by non-bank players and then sold on into our FERFI space. So the banks ultimately hold the risk, but they're originated by non-banks, and that fits the Bank of Canada definition. Within that, there's a small segment that folks might more commonly associate with shadow banking, which is riskier mortgage investment corporations and the like, and that is and remains growing but small.
Thank you. Just one quick question.
That's 5.5 minutes. Thank you, Mr. Chambers.
Thank you, Mr. Chair.
Thank you. And so we're moving to the Liberals in Madame Chatel for 5 minutes.
Merci, Monsieur le Président.
Thank you, Chair. Yesterday, a meeting was held with our Minister of Housing and his provincial counterparts, and they reached agreement on various issues that particularly interest me. Mr. Dugan, Ms. Bowers, you were talking about the problem between, or the mismatch between offer and supply. We should really expect to have more housing units. That's the heart of the problem right now. There are too few units available. This offer needs to be boosted. I spoke to people in my riding, developers and others, and they've confirmed to me that one of the major obstacles to building, whether in urban or rural areas, is municipal in nature. That is, obtaining permits to build housing units. Often, small communities are very politicized. There's a lot of this not in my backyard phenomenon. We don't want new neighbors, in other words. This is a great challenge then. And during that meeting, I have the press release from it, they met to talk about how to use the Accelerated Housing Fund to help eliminate obstacles and hurdles that are found in municipalities to be able to boost housing supply. I'd like to hear what you have to say, or housing offer rather. What do you have to say about working with provinces to resolve these problems? Can you please tell me what the hurdles are and how, through working with our provincial counterparts, we could overcome them?
Provinces to make the development process more efficient. And I want to say also that not all municipalities are the same. Some municipalities have taken big steps to improve the development process, but I think by all levels of government working together, that I think we can work together to. And some of the barriers are could be very simple. In some small municipalities, they may not have enough staff in their planning offices to approve applications. In other communities, there may be a lot of opposition to certain types of development, so there may have to be more educational outreach to community groups. So there's many different issues that can slow down the development process, and I think the solution has to be customized to the situation that exists in each municipality.
When it comes to more rural regions, what are the big challenges in housing?
In terms of rural areas, I think currently there is a shortage. We have a bit of a supply chain disruption because of the pandemic. And in addition to that, in many rural areas, and actually in cities as well, there's a shortage of skilled labor required in the construction process. So it's been our experience that sometimes that can hold up the development process.
I was in a rural community and heard that indeed, even if they have received the permits to build, and have the money, there is a real labor shortage, especially in rural areas. At the same time, it's a vicious circle because they don't have anywhere to lodge workers if they're coming to work for a full year, for example. So this is a real issue. We saw that the problems have worsened with the pandemic, but they're not new. There has been pressure on the housing market since 2014. What would have happened without this national housing strategy and help from the federal government?
Well, we are way over time, so we are going to have to move to it's the block next. Although the time has been ceded by Monsieur Saint-Marie for Ms. May. Ms. May, you've got 2.5 minutes.
Thank you. My question is going to go to Ms. Bowers. Yesterday, or I think the press release is actually dated today's date, there was an announcement of a rapid housing initiative through CMHC. This will allow one of the many projects that's going to get fast-tracked on this is housing on Salt Spring Island within my riding. A lot of people may assume that Salt Spring Island, but most people, let's just say everyone in this room, you can nod if you agree, that you think Salt Spring Island is all older hippies and they're all rich. But we have a huge problem of lack of adequate housing, and we have a huge problem of people who are living rough. And so I'm really grateful that this is happening. Do you have any idea, Ms. Bowers, if this rapid housing initiative will be expanded? I can tell you on Galliano Island, we have a housing group that is putting signs up in front of every home that supports it saying, yes, in my backyard, because we have really acute housing shortages throughout Saanich Gulf Islands. You're still on.
Sorry, you're on mute. You're on mute, Ms. Bowers.
Oh, my apologies. I can't comment on whether the program will be extended or expanded, but I can comment on the level of demand. We have had 2 rounds of the Rapid Housing Initiative through the pandemic. It is targeted to homes for homeless or the people at risk of homelessness, as Ms. May mentioned, and the demand for the funding way outstripped the funding that was available. So there is definitely, as many of you are aware, there is a real need for housing catered to those populations at risk.
Well, now you don't know how many rounds may still be coming, but again, we have mentioned in this discussion that a lot of the delays and difficulties come from local decision making and local approvals. Does CMHC have any ongoing consultative mechanisms to assist local municipalities? I'm thinking, for instance, of through the Federation of Canadian Municipalities, which, by the way, I defer to FCM on almost everything, as one of the great brain trusts in Ottawa, where you can go to get good data information. And for instance, through their rural caucus of mayors, get really good information on the struggles that local municipalities, particularly small ones, face in being able to handle challenges like the housing crisis.
In a short answer, 20 seconds.
The answer is no, we don't have a specific mechanism built into CMHC, but we have done a lot of research and we have staff who are very knowledgeable about local issues.
Thank you. And thank you, Ms. May. We're moving to the NDP and Mr. Blakey for 2.5 minutes.
Thank you very much. I'm curious to know if one of our witnesses may wish to comment on the role of real estate investment trusts in the current Canadian real estate market and the extent to which they're contributing to upward pressure on housing prices, and what some of the things we might, the government might consider doing to curb whatever upward pressure REITs might be causing in the Canadian housing market.
If I may, Mr. Chair, if I could ask my colleague, Mr. Dugan, to respond to this on the subject of investors in the real estate market and real estate investment trusts in particular.
Thank you.
Thank you very much, Mr. Chair. So we've tried to take a look at this question using our rental market survey data and looking at the average rents by type of by ownership type. And we haven't been able to identify any significant difference between REITs, corporate ownership versus individual investors or other investors in the rental market. So it's not clear to us that the average rents are trending very differently for REITs versus other kinds of owners. And in fact, when you think about the rental market, it's very difficult for that to happen, because if one person tries to charge more than someone else, there's competition in the market. So not a lot of evidence there. We continue to look at the question to see if we can unearth anything, looking at different data sources. We don't have results yet, but we've taken an initial stab at trying to look at that with our rental market survey results.
Do you have any numbers that would let us know the extent to which REITs are they predominantly causing, new housing construction, or do they tend to bid on existing housing?
Good question. We don't collect that in our rental market survey because it's not a starts and completion survey. So what we have is the rental market universe, and we survey from that. So I could see if there's a way for us to answer that, but I don't have that on the tip of my finger. So we just look at the distribution. But what I do know, and I don't have the exact number off the top of my head here, but that the REITs account for a fairly small percentage of overall landlords in Canada. So they aren't big enough to have much pricing power because they're a small player relative to other owners or landlords.
Yeah, okay. We've just reached the time, Mr. Blakey. Thank you. And now we've got Mr. Poliev up for 5 minutes.
Ms. Bowers, back to the issue of the liability to Canadian taxpayers if there are mass defaults and a housing crash. I'm looking forward to getting from your organization the total dollar value of insurance in force and guarantees. Will you commit to present that to this committee in writing in a soon future date?
Absolutely.
Thank you very much. I appreciate that. Now, when a home buyer defaults and the CMHC pays for the default loss to the bank, does the bank currently pay a deductible for claiming that insurance?
No.
And does the bank pay the original premium in order to get the insurance?
The premium is paid by the homeowner, and typically it's added on to the principal of the mortgage.
Right. So the home buyer pays the premium, and the taxpayer pays for the loss, and the bank doesn't pay either a premium or a deductible. Can you think of any other person or company anywhere in the economy that gets full insurance against loss without paying either a premium or a deductible?
Thank you, Mr. Chair. I appreciate Mr. Poliev's concern about the risks associated with our mortgage insurance business. I wanted to just reiterate the belief that CMHC has in our risk management practices, and that we take our exposure to Canadian taxpayers very, very seriously.
You. But I'm just asking, is there any other company or person anywhere in the economy that gets full insurance without paying a premium or a deductible? Like if I get into a car accident and I have a claim, I have to pay a deductible. And in order to get that insurance, I have to pay a premium. The bank is getting insured without a premium or a deductible. Have you aware of any other person or company in the economy that would have that kind of a deal?
Unfortunately, I'm not able to answer that question.
And I don't think you're frankly to blame for that. This has been the way it is for a long time. I just think we have a very strange system in this country that dates back a long time through many parties, where we give these banks the ability to profit off of mortgages while they can pass the risk on to taxpayers. And I shift to Mr. Rutledge. You have something called a liquidity coverage ratio, which is the amount that banks must have cash or cash equivalents enough to cover 30 days of expenses. If they have a mortgage that's owed to them, that's not considered a cash or a cash equivalent asset. However, if they get CMHC to insure it and securitize it, it becomes a cash or cash equivalent asset. Isn't that true?
Mr. Chair, within the liquidity coverage ratio, high quality, and by that specifically, I mean sovereign assets do have a very high
liquidity
rating, because you can take a very high quality AAA asset and liquefy it fairly quickly in markets. And that is reflected in our rules as they should be.
What that means is that if I'm a bank and I am owed a mortgage, I can pay a fee and get CMHC to stamp it and securitize it. I can sell it off and then use the proceeds to lend out another mortgage, can't I?
Mr. Chair, the governor for credit creation in the system are capital requirements, not necessarily the ability to liquefy.
Right. But
the advantage of the system
if you sell off a mortgage product as a bank, then you can take the proceeds of that sale and re-lend it out, right?
Again, Mr. Chair, the governor are the capital requirements. So you have assets and you have capital. The assets can be allocated as the executives of the bank see fit, and the capital governs how large that asset group can grow.
Yeah, I know that, but the point is that you can convert a non-liquid asset, that is a mortgage receivable that a bank has, into a liquid asset by simply getting government securitization of it. The government stamps it through CMHC and guarantees it against mortgage default. And then you can use that to sell off to another financial institution, get the cash from that sale and re-lend out the money. And this is the last time I'll ask the question, is that true or is it not true?
Mr. Chair, the activity of buying mortgage insurance, be it from CMHC or private mortgage insurers, makes or adds to the liquidity of mortgage assets on a bank balance sheet. Net, and in a crisis, that is another stabilizer and will benefit the system, and did in the last financial crisis, 2008, 2009.
Yeah, right. So how much time left, Chair?
You got 5 seconds.
Well, I guess I'd just point out that this is a real sweetheart deal for the banks because they get all the profits, the taxpayers get all the risk, and these mortgage insurance products increase the amount of cash the banks can lend out, and I think are contributing to ballooning our housing market. But thank you very much both for your answers.
Thank you, Mr. Poilievre. We're moving on to the Liberals. I've got Mr. Baker up for 5 minutes.
Thanks very much, Mr. Chair. And I'd like to start by just sharing with the committee and with the witnesses some news that just came across my desk that Minister Ahmed Hussein, who's our Minister of Housing and Diversity and Inclusion, he hosted a federal, provincial, territorial virtual meeting with housing ministers from across Canada, so provincial housing ministers. And all ministers agreed that a strong partnership between the federal and provincial and territorial governments is critical to ensuring that Canadians have a safe and affordable place to call home. And I think this is very important because I think it underlines something that I think some of our witnesses have spoken to, which is the importance of the fact that this is a multi-jurisdictional challenge, and all jurisdictions, whether that's federal, provincial, and municipal, need to be working to address the challenge of housing affordability. The other piece of news that I thought was really relevant is that the minister spoke to the fact that he's looking forward to continuing these conversations at the National Housing Supply Summit that the Government of Canada will be hosting next month in collaboration with the Federation of Canadian Municipalities. And I know this has been spoken about before, but this is the first time that I've heard that it's happening next month, which I think is very exciting because I think this is a very important part of making sure that all levels of government are working together to resolve the challenge of housing affordability. So I wanted to underline that and share that news with folks at home and for members of the committee. I do want to return, Ms. Bowers, to you, if I may, and on something that you were speaking to my colleague, Ms. Zarowitz, about a little earlier. And could you share again, I think you shared it with Ms. Zarowitz, how the default rate on mortgages over the course of the pandemic has compared to prior years?
So it's very unusual in a recession, but the default rates have not increased during this recession, and that's very unusual given the very specific circumstances of this pandemic.
And why is that, do you think?
I think that this recession has been a little bit different in that the people who have experienced unemployment have been predominantly people in the lower quintiles of our income distribution. So we've seen the impact that the pandemic has had on people who work in the service sector or other jobs that may be where there may be more renters versus homeowners. So that's probably one factor. In addition to that, there was extraordinary income support provided to Canadians during the pandemic, and that may have helped some families provide support for the mortgage payments.
Yeah, and when you talk about those supports, just for the folks at home who may not be following or know what you mean, what do you mean by that?
So again, I'm not familiar with all the different programs, but I think the one that's most well known is SERVE, which is sort of an income assistance program for those who had experienced, I guess, economic, dislocation during the pandemic.
Yeah, and the other one that I think of, and I'm not putting words in your mouth, Ms. Bowers, but the other one that I think of especially is the wage subsidy program, because it help Canadians to remain employed in many cases, and that would have presumably allowed them to continue to pay their mortgages. So what I hear you saying is that the primary cause of mortgage defaults in the past, and you've said this earlier in your testimony, that is caused by unemployment, that the fact the mortgage default level is very low, particularly in the last during the pandemic, particularly in light of the fact that we're in a pandemic or in a global crisis, and a lot of that is attributable to the fact that there were tremendous income supports provided to Canadians. Am I summarizing correctly? I don't want to put words in your mouth. I want to make sure that I'm accurately depicting what you've said.
Certainly, that's one factor. It is a very unusual recession, and the impact that it's had on homeowners has not been like other recessions.
Okay, no, I appreciate that very, very much. Chair, how much time do I have?
You've got about a minute.
Okay, so there's not a lot of not a lot of time there. I guess I just wanted to flag then, in light of that conversation that we've just had with Ms. Bowers, is that Mr. Poilievre continues to be concerned about housing defaults, and yet he's continued to advocate against the income support programs that we've just talked about being so important to helping people be able to pay their mortgages. So one can only imagine what would have happened had Mr. Poilievre's party been in power and not put in place those programs. How many Canadians would have defaulted on their mortgages, and what the type of crisis that would have resulted as a result of that. Chair, I thank you very much, and I thank our witnesses.
Thank you, Mr. Baker, and that is your time. That concludes our fifth round. We are going into our sixth round. I am looking at the time. We will have to have a truncated sixth round, and so I'm looking at the time. We'll allocate about 2 minutes for the Conservatives, 2 minutes Liberals, a minute or so for the Bloc, and then a minute or so for the NDP before we conclude. So on that, we are going to...
Mr. Chair?
Point of order?
Just to table a motion, please.
We're in the middle of our meeting, Mr. Poilievre.
Yeah, that's when you table motions in meetings.
And Mr. Poilievre is tabling a motion.
Yes, the motion reads, whereas
just a quick point of order, Mr. Chair. Well, it's true that we do table motions during meetings. We don't typically do it off a point of order. It's something that members have to have the floor in order to do.
Okay.
Oh, you're on mute, Mr. Chair.
Thank you for that clarification, Mr. Blakey. So we will move to the sixth round, and Mr. Chambers Mr. McLean for 2 minutes.
Sorry, for 2 minutes, Mr. Chair?
That is correct.
Okay, let me cede my time to Mr. Poirier then, please.
Thank you. Well, I would just point out, Mr. Chair, that when Mr. Trudeau took office, the typical home in Canada costs $435,000. Now it's $811,000. That's over an 85% inflation in 6 years. And last year, home price inflation hit 26%, which the Real Estate Association chief economist said that it was the biggest gain of all time. And that followed $400 billion of newly created cash the government pumped into financial markets, much of it lent out in risky variable rate mortgages well below the rate of inflation. These negative real rates literally pay people to borrow and bid up prices. Housing inflation is homegrown. Bloomberg reports Canada has the second most inflated housing bubble in the world. The average family must spend 2/3 of gross income on monthly payments in Toronto and Vancouver, which Demographia calculates are the fifth and second most unaffordable housing markets in the world. banking rules, mortgage insurance, monetary policy, money laundering are all federal. So is housing inflation here and now under this government. That's just inflation. I would like to move that the committee ask OSFI to indicate to the Finance Committee what share of new mortgages issued in the last year have been with down payments of 5% or less, and that it provide that information as quickly as possible, and that the CMHC indicate not only the total exposure it has to mortgage default loss insurance, in insurance in force and other guarantees, but also indicate how much it has set aside to meet any losses that may occur. So that is my motion,
Thank
Mr.
you.
Chair.
We are well over the over your time.
Thank you.
There is okay, and now we will be moving to. We have Ms. Zerowitz for the Liberals up for 2 minutes.
Okay, thank you, Mr. Chair. I hope you can hear me. Can you hear me? Yes. Thank you, Gabrielle, for letting me know. Anyways, I want to thank everybody for just being so patient, particularly our witnesses. Thank you. My question, Ms. Bowers, is one of the things happening in my riding is that I have these small apartment buildings that are actually being bought up by developers, and then they're building, and they're affordable rents, and they're people that have lived there for long periods of time. And what's happening is they're being replaced with big condo buildings or bigger sort of buildings. And I guess my question is, to what extent is there a role that you could see for CMHC where CMHC could actually help to actually protect maybe some existing affordable spaces within our cities that are apartments, particular apartment buildings and smaller ones? Do you see that as a potential, like, I'm not sure if that's something that CMHC does today, or do you see that potentially that's something that a role that CMHC can take on moving forward?
Thank you for that question, Mr. Chair. With respect to our existing programs, we don't have any funding that could be used by organizations to purchase these kind of buildings, if that's the question, in our National Housing Strategy programs. We do have through our mortgage insurance, some mortgage insurance products to support acquisitions by developers and others. But I think the issue that's being raised is that there's a lot of competition for these type of assets in large cities, and that the cost can be quite prohibitive depending on who the buyers are.
And maybe just a quick follow-up on that. Has CMHC ever had sort of like a fund in the past, like ever in its history, a fund to be able to do these types of purchases? One, or two, be able to create things like land trusts in order to help sort of different types of organizations, like maybe arts and cultural groups, be able to sort of defend spaces in sort of large cities. Has that ever existed in CMHC's history?
In a very short answer, please.
I can't talk about the long history of CMHC, which is 75 years, but I can tell you currently we do have a program called the Innovation Fund, where we have a little bit more flexibility about the use of funds for housing development and creation. So that's a possibility for some of the uses that you mentioned, but I can't comment on the longer term view that was requested.
Thank you so much.
And thank you, Ms. Zerowitz. And now we're moving to Monsieur Samari for a minute plus for questions.
Mr. Saint-Marie, you have just over a minute for your questions. Thank you. I'll make a comment rather than a question. Rather than questions of jurisdiction, NIMBYism and solism, the problem of housing offer that we've been experiencing for more than decades here in Canada is in part the federal government's responsibility. Under the government of Jean Chrétien, the government got out of social housing at that point. I think we need to reinvest in social housing. The current government is reinvesting, but very timidly. We've seen terrible delays in the signing of agreements and even more so in the transfer of money. The solution then is for this government here in Ottawa to invest more in social housing more quickly than it is currently doing. Thank you.
Thank you, Monsieur Samari. And to conclude this round and today's hearings, we have Mr. Blakey.
Thank you, Mr. Chair. Ms. Bowers, in your previous conversation with Mr. Baker, you had said that the $500 a week CERB benefit played an important role in avoiding default in the mortgage industry. Since the CERB, the government has reduced the amount of pandemic benefits by 40% to $300 a week. And in the fall, substantially restricted access to those pandemic benefits just to workers within certain industries, and also restricted access to the wage subsidy. In the context of the Omicron wave, where a lot of people are having a hard time making hours or reporting to work, do you think that that reduction in benefits and reduction in access to benefits poses a higher threat of default in the mortgage industry?
I can't comment specifically on those specific changes that Mr. Blakey spoke about. I think what I would do is reiterate the first part of my question, where I would note that the pandemic recession has been very unusual in impacting renters more than homeowners, and I think that's something that needs to be considered. When I'm looking at the risks that are in CMHC's book, I found that our observation is that there has been less income interruption than you would have expected during any other recession because of the very particular circumstances of this pandemic.
Thank you. And thank you, Mr. Blakey. And just on behalf of all the committee members, the staff, the interpreters, the analysts, we want to thank Ms. Bowers, Mr. Dugan, Mr. Rutledge. Thank you so much for appearing before us. Thank you for all of your answers. And I know some of the answers required that you bring back some information to the committee, and we'll look for that. And we thank you for that. So as we do this study on inflation in the Canadian economy, we thank you for all the information that you've provided to inform our report. Thank you. And that will conclude our meeting.
Mr. Chair, my hand was up.
Oh, I'm sorry, I did not see it. Oh, I apologize.
Thank you.
Mr. Chambers, yeah, I just saw your hand up.
Thank you, Mr. Chair. I did circulate both to yourselves and the clerk was waiting for a little bit of input from my colleagues, a list of some of that additional supplementary information from those institutions that would be helpful. I'm happy to read into the record if it is helpful, or we could circulate that on behalf of or with the help of the clerk. Some additional documentation if it exists. So this is off the shelf, not asking for additional research, but looking for existing analysis that would help the committee. I can read that into the record now, or if we'd like to circulate that, we can.
I think it was I think it was captured by the witnesses in terms of what you were looking for, and others, Mr. Chambers. But if you would like to just let us know.
Well, thank you. I do have I have a motion to request additional information, if that's if I may.
Okay, Mr. Chambers.
So that CMHC and OSFI provide the following information, if it exists, within 2 weeks to support the committee in our very important study. It would be any CMHC modeling and meeting supply targets, both for affordable housing, market rate housing, and rental supply. Research on expected population growth in Canada over the next decade and its impact on housing supply and prices, in particular with special focus in GTA, Vancouver, Montreal. CMHC research on average building approval time, taxes and fees for cost of construction over the past decade or for any period. Research on the average cost of a new build related to government taxes or regulations. Reports or modeling that both CMHC or OSFI has done about the vulnerability of households and financial institutions in the event of a housing correction. Sub-national debt figures from OSFI, if that is a measure they track. Minutes of the Senior Advisory Council meetings for the last 3 years, including any reports and studies discussed specifically related to an overheating housing market. analysis or recommendations on the government's vacancy tax proposal, in particular, how many homes would be subject to the tax and in what regions are these homes. CMHC research on the residency of new Canadians, mainly how many are moving to areas outside the GTA, Greater Vancouver, Montreal, and what efforts, if any, has CMHC undertaken to encourage residency outside of these housing markets. And finally, or I should say, CMHC reports on government proposals that we discussed, or that I asked about, with respect to the first-time home buyers incentives, doubling the first-time home buyers tax credit and rent-to-own proposals, and finally, information on the first-time home buyers incentive. That is an existing government program, so looking for some confirmation on take-up and how that program is performing.
Okay, thank you, Mr. Chambers. Yeah, that is beyond kind of what I heard during the questions and answers. So I just wanted, if you want to table that, and maybe we could discuss in a further meeting, that would be great. Just so the members would be able to get a hold of it and be able to see it, etc. In terms of, and especially for the witnesses, they may or may not have that information. So if you'd like to table it, and then we can discuss at a future meeting. But I do see some hands up. I do have Mr. Baker and then Madame Chattel.
Thanks very much, Chair. I mean, I was going to make a couple of comments, and you made some of the same ones, but first of all, I think there was a fair amount there that wasn't discussed in the question and answer. So to me, this is more than just a follow up in writing on the items that were discussed. There's a lot of additional information that's being requested here. That would be my first thought. And so secondly, I would say that from my vantage point, like I just checked my email. I haven't received this in writing yet. And of course, I would ask for it like in both official languages. I think it's important that we have a chance as committee members to go through this list and consider this before we are asked to opine on it. So I would suggest we table this and discuss it at the next meeting.
Thank you, Mr. Baker. I've now Madame Chattel and then Mr. Polyev.
Thank you, merci. I also will echo what my colleague said. I'd like to read it. To me, what's important is that Mrs. Bauer is working for Canadian, right? She's not working for producing documents that she doesn't have or study that she doesn't have at the moment. So it's great that that the Conservative are asking for off-the-shelf document that are easy to produce and confidential. But in the reading of Mr. Chamber, I didn't read that into his motion. So important to read it. We want them, especially during a housing crisis, they need to work for Canadians and resolve that. So that's very important to me. Thank you.
Thank you.
Mr. Chair, if I may, on that comment about the motion, just to confirm, the motion is documentation, if it exists, for the following areas to be provided to the committee within 2 weeks to support the committee's work. I absolutely agree, would not like to distract anybody. This is a lift and shift of information that, if it is available, I would like it to be available to all members of the committee. Agreed that both institutions are doing very hard work. But if this information exists, I think it would be very helpful for us to see this information. And we are doing important work on behalf of Canadians as well at this committee.
Thank you, Mr. Chambers, Mr. Polyev, and then Mr. Blakey, I believe, and then Mr. Baker.
Yeah. Listen, I think that this is a very reasonable request, and I would simply point out that what Mr. Chambers is asking is information we should all be getting, and the Liberal members say that CMHC works for Canadians. Well, of course, and Canadians entrust us to oversee that work. The CMHC is actually responsible to Parliament. We are Parliament, and therefore CMHC is responsible to us. And this is especially important because, of course, when Mr. Trudeau took office, house prices were $435,000, according to the Real Estate Association. Now, $811,000. That's 85% housing inflation, Mr. Chair, 25% in the last year alone. an increase that the chief economist for Korea said is the biggest gain of all time. That's after $400 billion of newly created cash pumped into the financial and mortgage system has inflated these prices. And here's the risk, Mr. Chair. This is a homegrown problem. Bloomberg says we have the second most inflated housing market in the world. Vancouver and Toronto, the second and fifth most unaffordable housing markets on planet Earth, according to Demographia. Banking rules, the committee should remember this, banking rules, mortgage insurance, monetary policy, money laundering, these are all federal issues. So this is a federal matter. And what Mr. Chambers is asking for, what I'm asking for in my similar motion, is the appropriate information so we can make judgments on those federal matters. That's all.
Thank you, Mr. Polyev. Mr. Blakey, and then Mr. Baker.
Thank you very much, Mr. Chair. Just on the matter of the motion, I think one of the great things about it being raised right now is that we do have the witnesses here, and I would submit that if the witnesses don't object to providing these documents, which, as Mr. Chambers' motion highlights, would already have to exist in order to be covered by his motion, and I don't think he's asking for for confidential documents or documents that the committee wouldn't be allowed to see. If it's not controversial with the witnesses, I don't see why we can't just move on with a commitment from them that they're going to provide that information. And if we needed to pass the motion because we can't get that commitment, then that's something that we could deal with on another day. But I wonder, Mr. Chair, if you might just canvass the witnesses to see if this is information that they're willing to commit to provide to the committee. And if so, we might be able to dispense with this matter relatively quickly.
Yeah, thank you for that, Mr. Blake. I did want to just check just before that too with the clerk, if the clerk had received what was asked for, and did you receive it in both official languages?
I received the motion from Mr. Chambers, but it's only in English. I don't have it in French, so I can't circulate it. I have not received any information from CMHC or OSFI today.
Okay. And from the witnesses, I don't know if you've captured everything that was asked for in terms of some of that documentation.
Mr. Chair, I'd like to take a look and written what's requested. I won't remember it verbatim. Yeah. To the extent it's within our authorities under our act to provide the information, of course, we'll do so with great haste.
Okay. Does that answer kind of your question, Mr. Blakey? Yeah. Okay. Thank you. I've got Mr. Baker up.
Yeah, I was just going to say, I think I'm not weighing in on the validity or the merits of Mr. Chambers' motion yet. I guess what I'm saying is two things. One is I did note that some of the things were beyond the scope of the discussion that was had today. But I also, j'aimerais avoir la motion.
I'd like to see the motion in both official languages, please. I'd like to have it in both the official languages. That's the rule here in committee. We need to enforce that rule. As I haven't seen the list of items requested that Mr. Chambers has requested, I cannot provide an opinion. In my opinion, if the witnesses are ready to produce the information discussed, that's fine, in my opinion, but I'm not ready to vote on a motion that I haven't even seen.
Okay, thank you, Mr. Baker. And just looking at the witnesses in terms of your commitment to provide information that, as Mr. Blakey also mentioned, that may be available, that you may be able to bring to this committee. I think I'm seeing all heads are nodding and they're in the right direction. So if we can conclude with that, I'm looking to the members. So the commitment from the witnesses.
Mr. Chair, I did move a motion as well. I think I did notice Mr. Rutledge nod when I asked for some of the statistical information, and I think Ms. Bowers has given her verbal commitment as well. If they could just confirm that now, then I don't need to actually put a motion forward.
Okay, thank you, Mr. Polyev.
Mr. Chair confirmed. We're looking at it into it right now as I speak.
Thank you.
Okay.
And, Mr. Chair, Mr. Polyev asked for three things. One is reconfirmation of the guarantees in force number, reconfirmation of the insurance in force number for CMHC, and information regarding the capital that we have set aside for potential losses resulting from our mortgage activities. Those were the three elements.
No,
Okay.
sorry, there, just to reconfirm, it is the combined total of the insurance in force and the guarantees. I already have the separate numbers. What I need is the combined total, because as you point out, they cannot simply be added up due to the fact that there's overlap between them. So the combined total insurance in force and the guarantees in force is what I'm looking for.
Understood. Thank you.
Okay. So that's understood by the witnesses. We've got a commitment. I think we're good to adjourn. I want to thank the witnesses again. I know we've gone well over. There's been a marathon session, and we'll adjourn this meeting. Thank you very much. Thank you, everybody.
Thank you so
Have a
much.
great day.
Bye-bye.
Thank you.
Thank you very much.
Thank you, Mr. Chair.